People still think I have control over the market, and they take out their anger and their losses, particularly on me.
Maybe tomorrow will be better.
Look who decided to join us today. Dude, she's feeling all forms of feisty after this whole Nvidia report. Say hi. Say hi, come on. We taught you, man. Nope. Stop. We talked about this, Piper. All right. The shows. We're already going a little bit off the rails. What is she doing? No way she's just going to post up there for the show. She has to jump down eventually, right? This is just a game of who wants it more. Whoa! Ah! Ow! Piper! No claws, dude. Just jump. Jump. Please just jump. Just jump down there. Jump. Just jump. Finally. Whew. She's a feisty little one. She's a feisty one. She does it. She does her own thing. Oh, now I'm getting yelled at for being too loud. It's not my fault. It's Piper's. Well, as you can tell, we're all feeling a little rambunctious this morning. We're all feeling a little bit jazzed up, if you will. And it's all for good reason. Not only do we have a lot to talk about with respect to Nvidia, which reported yesterday, we streamed it. We did a breakdown. I'll do a really quick recap so everyone knows what's going on. The TLDR is the very short term might be a little bit rocky, but overall, Nvidia is just such a quality company. It's such a quality stock. I still fully believe in terms of its long-term success. I have no pieces of information at this moment that suggests that its long-term might be not be completely lights out. So short-term may be rocky depending on this whole Blackwell chip thing. And I'll break that down and what it means and what it doesn't mean. So it's up to you. Are you a trader? Or are you in it for the short term because you're trading whatever the current trend is in the short term? But as an investor, clearly technology is going the way that Nvidia is going to be needed more and more and more. So it's kind of up to you and the time frame in which this trade and or investment is. So I want to talk about that. And I also do thank you for joining me early today, because we are actually going to get the GDP report and the initial jobless claims. So yes, we're going to talk about Nvidia, which caused post-market to go crazy. Things were negative. Then right now we've had some amazing recovery. Actually, let me just even show you that. Things were pretty bad. And then you could see this amazing recovery. I mean, look at the futures market. It just started ripping. You could see it on the 10-minute. Things started to pick up around 20 o'clock. Around 8 p.m. and it just didn't stop going. People just clearly use this as a buy the dip opportunity, which I mean, I myself included found very surprising. So anyway, things are actually looking pretty green right now. The SPY is in the green, the Qs are in the green. You could see ES, NQ, and the Russell, all of them green across the board. Even though late last night things were pretty freaking red. So what a turnaround. So that's one thing to consider. The other thing to consider. Stock futures rise as Wall Street looks to rebound from Wednesday's pullback. Interesting. Okay, we are bouncing back. Will it hold? Well, that's going to depend on this GDP report and the initial jobless claims. The line in the sand for the GDP report is 2.8%, and then the initial jobless claims is 232,000. So that's all coming out in about 3 minutes. It's coming out at 8:30 a.m. ET. So we're going to see how that one goes. We are very much going to see how that one goes. I think I have this fired up over here. Let me make sure we have it. Not live. Well, we very much would prefer Yelp sues Google over antitrust. It seems like everyone's suing Google these days. I know the DOJ is causing some problems for Google. We know Rumble's causing some problems for Google. And now apparently Yelp is causing some problems. Google's just getting sued to kingdom come, folks. That's they're getting very much into some legal murky water. So maybe we check in at this whole story in just a little bit. But obviously, the major thing of the day, at least for the morning, is GDP initial jobless claim. So here's the plan: is we're going to find out these numbers. We're going to watch the market, see what it has to do. I have some trades set up for that to see if I could take advantage of the insanity. So I'm excited for that one. Then we're going to break down everything about Nvidia. We have some other earnings to talk about. And just because we're starting early today, we're going to have some extra time. So I'm going to give that back to all of you. And we're going to do some like chart reviews and kind of explain the upcoming day. So very, very excited about all of that. But I want to ask you, just because we are now, 2.5 minutes out, almost 2 minutes out, what's everyone's thoughts? Tell me your best guess on what in the world's about to happen. The SPY has had an amazing recovery from just where we were. We were at 554, bounces all the way back up to 560. I mean, it's a $6 bounce. Do you think from here it's going to be a catalyst to continue higher? Or do you think this is actually just like kind of a high water mark and we're about to vomit? Which way do you think the initial jobless claims and GDP numbers are going to send things? Because we're going to find out in literally 2 minutes. 2 minutes, 2 minutes, 2 minutes. We are about to find out all the good stuff. We're about to find out, and I'm just curious where everyone's mind's at. Where is your mind at? And hey, if you guess after the number comes out, it doesn't count. That's cheating. We're going higher, missing big down. So the very first two things I'm seeing are the complete opposite. First one says going higher. Second one says missing big down. Someone's buying Nvidia at 100. I think that's a smart idea, especially as an investor. If you're trying to actively trade it, it kind of depends on the time frame and what you're looking at. But to scoop up Nvidia at 100 just as a long-term investment, killer. Vomit, sideways up, then down. Here we go. Burn, baby, burn. Woo, woo, woo. Time for some fun. It's going to be green. Insiders already bought. Down, going back up. You guys are completely split today. You guys, generally we have some form of a consensus, but you guys are not even, you're not even giving me that today. Interesting. All right. Well, we're about to find out. Once again, lines in the sand for GDP is 2.8%. Initial jobless claims 232. Generally, I don't find initial jobless claims to be that, I guess, provoking for a market move, but over the past 2 to 3 weeks, we've actually seen considerable moves, not only initially, but also for the remainder of the day off of initial jobless claims. So might be something to start paying a little bit more attention to, but we are about 30 seconds out. Let's get this going. All right. Hopefully they bring on our boy Rick Santilli. Hopefully, but anyway, we're about to know. Let me drop this. Let's go to the 15-second chart. Here we are, folks.
A lifesaver.
5,
we are just
4,
a few seconds away
3,
from initial jobless
2,
claims. Also
1,
revised second quarter
boom.
GDP, but it's those jobless claims
Boom.
that the market will be watching
Boom.
pretty closely based
Boom.
on what we
There we
heard
go.
from Raphael
Order
Bostic
filled.
yesterday. Right now, Dow futures up by about 260,
Target.
the Nasdaq up by
Order
close to
filled.
60, the S&P up by about 18.
Well,
Rick
looks like
Santelli
I picked the
standing by
right
at
side.
CME. Hey, Rick.
Hey, Rick.
Yes, good morning, Becky.
Come on,
Initial
folks. Give it up
jobless
for
claims,
Rick.
continuing claims
Give it up
hitting
for
the
our boy
wire.
Rick.
12 weeks in a row above 1.8 million. We'll do continuing claims first. 1,868,000, very close to expectations.
There's our
Last
boy
week
Rick.
Was subtly revised from 1.863 million to 1.855. As I said, 12 consecutive weeks. Initial claims, 231,000. Very close to expectations.
Very
And
close.
that is 2,000 less than a slightly revised
Rick.
233,000.
We're going. Dude,
And
the
if
Bulls
you
are back
continue
in
to
town,
monitor these
just like
claims,
that.
it's been a
Look at how
while.
one overnight
250,000
session changes
was the high
everything.
watermark last week in
Crazy.
July, and they have
Look
been
at
on the low
SPY's
side
up,
since.
Q's are up.
In the 230s,
Everything's
we've
just
had
back, brother.
228, that was in the second week of August, and all these numbers, as Becky pointed out, continue to drive the notion that it's still a split decision on exactly how weak the labor market is getting. Now, let's turn towards GDP, a revision to the upside. Second quarter, second peak.
Revision. That's why we're up.
To 3%.
They went up 2.2. Whoa.
The last quarter of 23 was 3.4. That's where we're comping to on the strength. Consumption also upgraded rather dramatically. 2.9% versus 2.3. 2.9 also comps the last quarter of
This is why we're
when it
up
was
right here.
3.3.
GDP 3% versus 2.8. That's why the Bulls are. Do you think these numbers were leaked? Because people were buying all night. All freaking night.
3.1%. And finally, if we look at the core PCE index quarter over quarter, it's the only metric here that came in on the light side. 2.8 versus 2.9. And, of course, the recent high watermark was 3.7 in the first quarter of this year. You see yields moving up on this data,
bull market.
whether it was initial claims or the rather strong revisions on the GDP. And I do point out the price index moved up.
Look at this.
Or didn't, but it's still much closer to 3%.
Look at this.
Real quickly,
SPY, Q's, and Russell. Everything's back in the green, man. Wild. Wild. You gotta love this. The world's largest casino.
Much stronger, up 0.8%. And in the rearview mirror, we have 0.7.
We're popping,
so
dude.
nice strength
It's
building
popping.
there. And last but not least, on the trade deficit, which is a trade balance. The balance is a deficit. This is well worse than we were expecting. Look at a number for
what's our trade deficit?
minus 98, minus 102, minus 102.7 billion. That is the worst level going back to May of 22, and it does underscore the notion that the rest of the world we need to pay very close attention to because, indeed, we are definitely consuming a lot more than we are exporting on that trade balance. Interest rates really popped up on that. We're at 3.86
Rates are up,
in a 10-year.
bonds are
That's up
down.
about 3.5 basis points. A 2-year note yield, well, now it's at 3.88, but prior to that, it was
Look at that
hovering.
recovery.
The lowest level should have closed around
The dollar's
3.83,
popping.
3.84 since May.
Bonds
of
are
last
down.
Year.
Yeah,
Becky,
bonds are getting
lots
hit.
of
So
data,
that can't be.
Lots of market movement. Pre-opening
Bitcoin's going
equity
up.
Futures are
Yeah,
even
dollar
doing
down,
better
Bitcoin
on
up.
this
That makes
because
sense.
There's nothing
Or,
wrong.
excuse me,
under 60
bonds down.
points.
Yeah,
or
bonds down.
actually
Exactly.
35, 40 points maybe for the Dow. Rick, I was just going to say thank you for that Lollapalooza of information. Nobody does it better with getting that many numbers. My head's spinning just trying to follow the whole thing.
She's right
Stay
on.
with us.
Only
We're
Rick
gonna have
could
a lot
do.
more to talk about
Only
with this.
Rick could
Joining
pull
us
it
right
off.
now for more on this new data and what it means for the economy and maybe more specifically what it means for the Fed is Laura Rain, FS Investments chief U.S. economist, also our very own Steve Leisman. Steve, what's your take
What do
on
you
all
have
of these
for
numbers?
us, Steve? Big Steve.
I'll go real quickly. So the jobless claims, I feel like every week this comes in the 230 range and doesn't spike up. We're dodging a bullet here. There's a lot of concern that the job market's going to give it up. It just doesn't do it. Rick is, I think, right to point out the extent
Rick's
to which
always
we're
right. That's how this works.
1.8 million on the continuing claims for a while. But
Yeah.
I would point
Look
out
at
that when we have a recession,
35,
at least in the
34,
middle of it,
28,
it doesn't give you
33,
much warning.
31, 39,
Continuing
20.
claims
Like,
goes to 4
we're
or
just
6 million.
consistently right
so
here.
We're not near that level. We're just up above a little bit where we were before, which was 1.7. On the consumer here and on GDP, I'll just read you that the current increase in real GDP reflected increases in consumer spending, private inventory investment, and non-residential fixed investment, which has been a bit of an unsung hero of our the recent expansion, which is this private investment, which has done reasonably well. And the consumer does not appear, Becky, to be giving it up. Rick is again right to point out the upward revisions on the inflation numbers. But the one indicator that Powell follows very closely, which is core PCE ex housing and energy, is down at a very low 2.3%. So I'll leave it there.
Okay, that's a lot to
Interesting.
digest. Stay with us still. We want to go through all of
How are
this.
the
Let's get
markets holding?
to Laura Rain and see
Giving
what
back
she
a
thinks
little
about
bit, but
this
still in
too.
the green,
Laura, which
above
of these numbers is the biggest
yesterday's
surprise? Which is the
close.
most important, do you think?
The Russell,
Just
the
in
small
terms
cap's
of
looking
trying to
really good.
determine what the economy is going to do, what the Fed's going to do.
I think of this big, wave of data. The initial jobless claims is the one that's going to get the most attention because it's really timely. And I think that higher unemployment rate was the news that really spooked a lot of us a couple of weeks ago. To me, this all adds up to, my expectation of an incremental slowdown from a very strong pace of growth. And I think that's what we're going to see in the third quarter. GDP that looks closer to 2% than these higher mid-2 numbers. I don't think that it's a time to start running around worrying about recession. I think this is what we've been expecting, that we had a lot of momentum. It was unsustainably strong. And it's important to recognize that we have an economy firing on all cylinders. Business investment continues to be solid. The consumer can
giving a little
moderate.
back.
They should moderate. That's a healthy thing. I think it's too early to get deeply concerned about a crash.
Giving a little bit of this back,
okay,
not
so
holding.
Steve, if we had Raphael Bostic, the Atlanta Fed president, saying that he thinks things may be slowing down, but he really
We're now
wants to see
below
these next
right where
data
we were
points,
at the
including
report
initial
time right
jobless
here at
claims
8:30.
today, before he makes a decision about
Drifting
whether to
down.
cut next month. That's a lot because the market has priced in a far more aggressive pace.
So let's separate that question, Becky, if you don't mind, into the near term and the longer or medium term. I think that's the way to think about it. I don't think Raphael is somebody, we talked to him in Jackson
Bostic
Hole.
spoke yesterday, and I
on
think
board
he's
with
speaking
cuts.
again
He said to
today.
me, this passive tightening idea is a thing. That is, the Fed has maintained that high rate of 538. Inflation has fallen. On a real basis, the Federal Reserve is tighter than it previously was. In fact, Goolsbee says that it's the tightest the Fed has been, at least in this cycle. So there's reason to cut near term. And I think the story coming out of Jackson Hole and from Powell's speeches, there is some tolerance around that. It is not necessarily if the job report is strong that would dissuade the Fed from easing. I think the story is about supply. If we have the labor force to do so, if the unemployment rate either stays where it is or even declines a little bit or increases a little bit, the Fed is still cutting. I think there's some tolerance around the inflation numbers for the Fed to cut, because what Powell told us is, I mean, Becky, the way I think about this is we are grading the improvement of inflation over the 4 years you went to school, not in the last 2 months. And that 4 years, or at least in this case, the drop over the past 2 years in inflation has been very notable, very unassailable, in the sense you've gone down from 9 down to 2.9 on the CPI
coming
number.
back up a little bit.
So there's room for the Fed to cut, to ease
Pretty
a
much
bit,
at the
remain
value we were at
restrictive. And
8:30.
it's
So
not
it popped,
like
gave
we're
it
gonna
back,
be,
coming back. So it's
on the
kind of
edge
net
our
zero
seat
now.
for 1/100th of a basis point on the CPI.
Laura, we've been
SPY's
noting
still
the
looking
market,
good. Q's looking good.
sensitivity to
Nvidia
the
recovered
weekly
a little bit,
numbers
but still in the
on
red. But the
claims.
Russell,
Clearly, there's
small
this
caps looking
underlying
bullish
concern
right
that
now.
maybe the softness in the labor
Bullish,
market is going
bullish,
to get away
bullish.
from us and get away from the Fed.
Bullish,
now,
bullish,
Powell
bullish.
and others have kind of relied on this idea that it is mostly labor supply coming in that's getting the unemployment rate higher, and you haven't seen a big uptick in layoffs.
Look
You
at
have
that
some
recovery.
Folks out there saying, yeah, that's not the way it usually works. Eventually, softening labor market becomes a problem. I guess we're going to have to test this week to week. And in a way, a slower Fed easing pace is often the preferable outcome from markets, I guess, because it means the economy is hanging in.
At least at the start of the easing cycle, I think that's right. They want to be cautious. And I think this is where we have to differentiate between what's good for the market and what's, the strength of the underlying economy. If the Fed eases less than markets are expecting because the data is strong, that's great news for growth. Markets may be a little disappointed. So, I think as we look ahead, the unemployment numbers are going to be the most important. We've shifted the focus from inflation to the jobs market now. And I think the Fed would prefer to go gradually. The good news is they have room to really speed up rate cuts if they need to. It's a better policy stance that the Fed is starting from than we've had in 20 years. I'm not
Bitcoin's
trying to
going
be a
up, though.
Pollyanna.
What's going on
This
with the
is going
dollar?
be
It has to
tough
be
navigate.
dollar
But
strong
there's
and
good
Bitcoin's
news
still going
here,
up?
and I think we need to keep
Bitcoin
our eye on
holding
the ball.
60,000.
The economy is looking solid. It's
Bitcoin's
weathered
actually
a
swinging
global
back around,
slowdown,
folks. A
higher
breakout.
interest
Here's your
rates,
breakout
and
alert on
against that
Bitcoin. Let's
backdrop,
see if it can
there's
hold.
a lot of underlying growth. across the, the
ETH
middle
is swinging
market,
around.
the 200,000
Solana's
companies
flat.
in the U.S. that are really driving
Bonds
a third
are
of
taking
GDP
a hit.
growth. Beyond the market, there's a strong economy that's very resilient.
Hey, Rick, the market's reaction to this, higher equities and yields
Dollar
a little
still
higher
showing
too.
strength.
You think that's more because the jobs picture looks intact, so they're less likely to cut, or more because, hey, this is good news if you're looking at higher equities that inflation is down too?
Well, you know what? I don't know that I agree with any of that. I look at consumption beefing up 0.6% up to 2.9 on a second revision. I see a 3 handle on GDP. I see a jump in the price index from 2.3 to 2.5. And here's what I think, okay? There's a two-speed economy. There's some that aren't doing well. There's some that are cooking in grease. But if you look at
Cooking in
pre-COVID,
grease. Dude, he
2018,
always has good
2019,
sayings.
You remember how
He
much
always
noise
has good
the Fed
sayings.
had made about being a couple of tenths under 2% inflation and how they kept rates so low, basically zero for so long. A couple of tenths. They really were stressful about that. And then they went out of their way to make sure we knew that 2% was a target that was carved in granite. Now, going the other way, we're not going to be symmetric. What? We're more than a couple of tenths above that 2% mark. And Steve can point to the XXX. If you take everything out, yes, you have no inflation. But ultimately, the response of positive news making equities go up and interest rates go up tells me maybe the Fed has some room to ease, but not very much.
Dude, he's always spot on.
Rick, I'm just
Is
pointing
Rick
out
the genius of our
message that
time?
Fed chair has been following and one he's pointed us to. But Rick, I just want to do a little of my own reporting here with you in a second. Been talking about this idea, you're -3 on the 210. So my question is, do you have your disinversion party hat and kazoos in your pockets now? Are you ready for this to happen?
What's
and
he have in his
how
pocket?
does it happen? Does it happen because the 2-year
Today's going to be a
falls more? Does the
banana.
10-year go up?
Shout out D
What's
Fox.
the thinking there on the floor about this disinversion? Are they very as excited as I am about it?
Giving a little bit of it back
They
right
believe
now.
it's going to be shared by both ends of the yield curve, that you're going to see a little bit more easing back in a short rate like a 2-year note, and that the longer dated maturities are going to be holding up a little bit better because of debt and a variety of issues, and include less weakness and more strength in the economy. So traders aren't going to take the bet only on 2s or only on 10s. They're taking the bet on the steepening curve. This has been a home run for many traders, Steve, and we're not just looking for it to come back up to zero. This thing's going to have some horsepower. I'm looking for it to get back into the 25 to 40 basis points of steepness area.
That, by the
right.
way, guys, if you haven't thought about it, I know Mike has the idea that this is interesting for the banking sector, Becky. I'll leave it there. But if there's positive slope to the yield curve, it's a positive development for the economy and the lending sector.
Mike, you want
I
to weigh
think
in?
that's something we need to always pay attention to, is the fact that debt and deficit dynamics, this is going to be a dominant issue coming into next year. It's a dominant issue today for the election. I think everybody saw the Fed pivot back in November. They assumed rates were going down across the curve. Short-term rates may come down. Long-term rates may be stuck at a higher level. We may be going back to the mid-1990s. I think that's a piece that markets, and especially these long-term sort of hyper-growth equity component of the S&P 500 hasn't internalized yet.
All right, Laura, Rick, Steve, thank you guys.
Dude, Rick always smashes it. Always
All right, coming up,
smashes
the
it.
latest potential eye-popping valuation for OpenAI. We're going to tell you about the new talks focused on the next-gen computing
12-figure
giant. And as we hit the
valuation.
break, here's another check of shares of Salesforce. They're helping power Dow futures higher this morning. Salesforce
All right.
topping it.
We don't quite need that. They're about to clean it all up. Whoa, we're giving more of it back. So initial reaction to the initial jobless claims and the GDP report, which initial jobless claims was basically at its value, was up by 1,000. So no big change there. But on the GDP, coming in at 3% when they were expecting 2.8. So the initial reaction was a positive one. Now it's giving it back. So you can see this. If you're looking at the SPY, right when the report came out, we were at 560.15. We jumped up about, 65 cents, and then we ended up dipping a little bit, almost, better part of $1. And now we're coming back a little bit. So up, down, bit of a recovery. But what's really impressive is this overnight. You can see this perfectly on the 10-minute. This is the S&P 500 futures market, which means we get access to the overnight trading session, just buy programs nonstop. You can see it started around 8 p.m. and it just kept going and going and going. I probably, like many of you, was shocked when I got up this morning and checked out the charts of just, we covered Nvidia. We saw the market wasn't reacting well. I mean, heck, look at this right here. The SPY, the late last night going into 8 p.m. was looking pretty crappy. We were below the low. The Qs were really crappy. The Russell also crappy. And then all of a sudden I got up and everything was green. I mean, I was getting ready this morning, brushing my teeth, and I opened up my phone. I just was blasted with a green screen. So I found it a little bit surprising. Who knows? Maybe people were just front running this report. Maybe they're generically optimistic, or maybe they just realized that the Nvidia report, I would argue people were overreacting to it because it was not bad. I mean, at one point, Nvidia was down 8%, and I don't see how, because it was still doing what it needed to do. It still was another beat. The market very much seemed to be overreacting to it. Wasn't as dazzling of a beat as they were historically. Like, the market was truly angry that it wasn't just beating in such a swift fashion. So instead of, I don't know, to use a basketball analogy, instead of continually winning every game by 30 points, it only won the last game by 20 points. And the market's like, we're used to you winning by at least 30 points. So what gives here? So still not just a win, a dominant win, like not just a beat. It was a dominant beat. They across the board raised guidance. They didn't say anything that negative. It was just the market, like I said, coming back to the analogy, instead of beating by 30 points, they beat by 20 points. And the market's like, oh, we're used to you beating always by 30 points. So when it was down 8%, that was clearly an overreaction. And right now it's down 3%, which, I mean, I do want to remind everyone, 3% in one pre-market session is kind of nothing when year to date you're up 155. Like, this is just something that it kind of just in the long term is just kind of washed out. When you're up 155% for one pre-market session to be down, like I said, by, as of right now, it's down by 3. This is just volatility. This is just, I don't know. In my opinion, coming down to here, 115 was an overreaction. Obviously, it's starting to bounce back up. Any major dip in long term in Nvidia, in my humble opinion, as of right now, as of the trajectory of the company and technology and the economy, I think every dip is to be bought as of now. Obviously, things change, but right now, I mean, Nvidia is still a great, great investment in my humble opinion. But hey, I implore everyone to do their own research with it as well. SPY bouncing back a little bit after this drift down, but overall, I'm still impressed with this overnight recovery. The SPY recovering, the Qs recovering, the Russell recovering, and even Nvidia recovering. So with all of that, yes, we did have those macroeconomic reports, but I do want to talk about some of the individual companies, because yesterday we had Nvidia, CrowdStrike, Salesforce, Affirm, and then and HP, and then this morning Best Buy, Dollar General. So we're still in the world of earnings. There's a couple tonight, and then after this, it's kind of like really the end of earnings season. But anyway, after the market closes today, if you're at all interested in Dell, Lululemon, or Ulta, those are all ones that I've seen you guys chat about. So I just wanted to put it on your radar. But let's do a quick review of everything you need to know about Nvidia. Nvidia shares dip in pre-market trades despite earnings beating estimates. They beat on revenue, they beat on earnings per share, and they beat on guidance. They beat across the board. So you might be thinking to yourself, okay, well, if they did all of that, then why is the market down? Well, first of all, why is Nvidia down? Like, why is it not in the green? Couple things to consider. Number one, past couple weeks, literally the past 3 weeks, it's already up 30%. So it's just more of, to keep it going, it's not just a beat. You have to beat in like clear style to justify the prices going up even more after gaining 30% in 3 weeks. Like, you have to have a really good justification. So was this all good? Yes. But it was like, as I keep saying, was it like dazzlingly good? No, it wasn't star-studded. And the issue with that is just because of the Blackwell chips. Right now, the question is like, when are they going to start really experiencing the revenue from selling all that? And it's predicted to be in a quarter or two that we're going to get that info, but that's basically it. Like I said, just to be very, very clear here, I think it overreacted to the downside because there wasn't anything bad being said. It was just the lack of absolutely phenomenal news that the market's reacting to. So remember, you shouldn't be basing the movement off of the exact close price. You still have to look at just what is the fair valuation of the company. And I think that's what a lot of people do, myself included, is you come to the stock and you're like, okay, cool. We closed at whatever, 125, all the way up here. We closed at 125, and then you psychologically anchor to that price point, and then you wait for a good or a bad earnings, and then you're saying, okay, if it's good and we beat, we should go up from there, and if it's bad and we miss, we should go down from there. But the anchor point doesn't necessarily make sense to be the close. It should just be the market cap of the company. Where are we? Right now, is it trading at a fair value? Is it trading it above it? Is it trading it below it? And right now we're down a little bit, but overall, this thing is still up 150+% this year. It's still the world's #2 most valuable company. So I think sometimes it's healthy to take a step back and realize, okay, like, where are we in the grand scheme of things? And especially when you're looking for quote unquote fair valuation, you want to know where you are in the grand scheme of things. Nvidia's earnings report shows the problem of being priced for perfection. For 2+ years now, everyone is expecting not only Nvidia to beat, and it has a very high bar, and it's been beating that, and it's been beating it by a lot. So that's the issue right here, is the bar was set high. Nvidia still cleared it. It just didn't clear it to such great heights that it has previously. And right now the market's like, it doesn't quite know how to handle that. And another positive thing here, and Nvidia announces a $50 billion stock buyback. I find that one a little bit interesting because the company itself is buying back its own stock, and then yet the insiders, particularly the CEO, has been selling nonstop. Nvidia CEO dumps over 120 million of shares ahead of the earnings. To be clear, he still owns billions of dollars worth of the company. He still owns a huge chunk. So, hey, maybe he wants to buy a new super yacht. Maybe he wants to buy a mansion. This isn't him getting rid of the lion's share of his shares, but it's not the best signaling when the CEO himself is selling. To be clear, he still owns, like I said, a majority of his initial equity. He's a billionaire from it. He owns a ton. And like I said, maybe he wants to buy a mansion. I don't know. Maybe he wants to, I don't know what the dude's doing. Maybe he's making his own Death Star and he needs a little bit of cash for it. But it's kind of interesting that the company itself is buying back its own stock when the CEO of the company is continually selling his stock. So kind of interesting. Another thing to add in about Nvidia of like why there might be a quote unquote surprise of downside movement. Don't forget, yesterday we found out that 5 different companies represent 50% of the revenue. The number 3 company on the list, representing a clear chunk, about 8 or 9% of the company's revenue, is SMCI, and SMCI is now getting its teeth kicked in twofold. We found out that Hindenburg came out with a short report saying, hey, their accounting is sus. Then we were supposed to get a filing from them, and they delayed it, which is not a good sign. It makes it really seem like what they're being accused of is actually accurate and truthful in terms of Hindenburg's standpoint. And it sounds like they're probably just getting lawyers on the phone of saying, what should we say? What should we not say? It feels like we got caught. So there could be some downward pressure on Nvidia if SMCI really does go belly up. So just another thing to consider there. But anyway, overall, the recap, Nvidia beat all headline expectations, raised guidance, and announced a $50 billion stock buyback plan, reported record revenue of $30 billion, which is up 122% year over year and much higher than the consensus of 28.7. I heard some in the low 29s, but regardless, it was a beat. The earnings per share was 68 cents when the expectation was 64, up quite a bit from 25 cents of last year. Record data center revenue of 26.3 billion, up 154%. And sees Q3 revenue at 32.5 billion, blowing past the forecast of 31.7. So you can see how they're continually setting the bar high. I mean, record revenue of 30 billion. They set the expectation at next quarter of 31.7, and the company says, no, we're targeting 32.5. So they're always setting the bar high. The company clears it. They're just not clearing it by the same ratio that they previously have. So it's a frustrating thing to internalize it that way. When you really think about it, it starts to make sense. But for those of you in chat, you're like, dude, wait, I don't get it. I'm bullish on Nvidia. They crushed. Why is it not up? That's exactly why. Nvidia is firing on all cylinders, and AI is clearly driving growth. Oh, without a doubt. I thought this was cool. Someone made a graphic of the Nvidia share price throughout history, starting in 1999. This is actually crazy to watch. Ooh, a little loud there. I mean, we're talking cents at first. Started back in 1999 was when it was publicly trading, and then it just absolutely explodes. And it happened so quickly, like nothing. It feels like it did nothing for years, and then just with the AI craziness, we're waiting, boom. Just like 2015 is when it started, and then it just really ripped. And it just hasn't stopped. Who knows how far it's going to go, but I thought that was cool. Just wanted to share it with all of you. Obviously, as mentioned, one of the other culprits is Supermicro. SMCI is the ticker symbol, fell 19% on filing delay in Hindenburg Research. I just want to remind everyone, probably worthwhile to pay attention to. It's down an additional 3.5% this morning. This thing has room to fall. This thing, from a technical perspective, could easily fall to the low 300s, currently trading in the low 400s. So there might be a 25-ish% drop from here. And this thing, like from a technical perspective, yeah, that's just its next major support level. So worthwhile to pay attention to the commentary, the narrative of how the company responds to Hindenburg. Does this require, I guess, the SEC to look into them, the DOJ to look into them? Is it real? Is it fake? Is the truth somewhere in the middle? This is going to be very legally narrative driven. So if you're trading this or paying attention to semiconductors in a general sense, most were likely worthwhile to pay attention to. CrowdStrike, the company that caused the entire world to have a blackout for a second. CrowdStrike beats quarterly consensus but lowers full year guidance. I'm surprised that I'm saying this, but CrowdStrike was actually up. Well, now it's down. It was up last night for a bit there. I guess quickly gave it back when they started talking, probably because of the lower guidance. This one, people were asking me if I would dip by this as it starts to recover. No, I wouldn't, because I don't know if this company is going to be sued into oblivion. We know a couple of the companies who were affected by their blackout are already selling them. And for all I know, there could be more and more and more. So for me, this isn't really technically driven or even at a certain point fundamentally driven. Right now, I don't know. My only legal knowledge is watching the entire series of Suits. So I don't have the legal mind to know if CrowdStrike is going to be just completely destroyed due to like their legal cases, because there's a lot of people who are arguing CrowdStrike owes them a lot of money. So for me, I'm just staying away from it. If there's a technical setup to bet against it, like it's starting to kind of curl back over right now, I might take advantage of it, but there's better odds than not that I just simply won't touch it because it's just out of my wheelhouse. I don't trade stocks based on legal knowledge because I don't have legal knowledge. There are people who do have legal knowledge who can obviously show that off within the marketplace and make great trades. It's just not my particular thing. So just want to clarify, CrowdStrike was looking good, but lowering the full year guidance, not so good. Affirm, crush it. AFRM right here, up about 24%, even more than we saw it yesterday. Affirm, the whole buy now, pay later. This company's crushing it. They're actually predicted to be profitable by the end of this year. So lots of great fundamental developments. Maybe not the best indication for the overall economy, that the fact that they're getting so popular in terms of business that everyone's buying now, paying later, maybe not showing the most strength for consumers, but overall, individually for this company, destroying. Closed out the day yesterday at 31.58, currently trading at 39, looking real good. So if you caught that on Affirm, congratulations to you. Salesforce beats earnings estimates. CFO Amy Weaver to step down. CRM, that's Salesforce, currently up 5% in this morning. The other tech play that reported last night was Hewlett Packard, not doing so good, dropped 2.36% yesterday. Right now in pre-market down an additional 2.8%. So HP not looking so good. Might be a little bit of a telegraph move for Dell. We'll find out after the market today. That's when Dell reports. And then the one that reported this morning, Best Buy raises full year profit guidance after earnings and revenue beat. So Best Buy, here, let's bring that up. I don't know Best Buy's. Best Buy. It is BBY. So currently up 15%. Kind of interesting that Best Buy's crushing it, but then HP's not. you would expect that they would be somewhat correlated, but hey, I guess not this morning. So anyway, Best Buy doing pretty solid. I just want to let you know, get the newsletter. It's free. You never have to pay for this ever. It's always free. Zero, zilch, goose egg. I break down the week. I let you know what's coming in the upcoming week. This will come to your email inbox every single Sunday. I let you know about all the major market events for the day. So for example, Thursday, August 29th, we already got the GDP. We already got the initial jobless claims. At 1 p.m. today, we're going to get the results of the 7-year bond auction. And then right before the market closes at 3:30, the Atlanta Fed President Raphael Bostic will be speaking. And then just so you know, tomorrow morning, we're going to be streaming early once again, because at 8:30 in the morning, we get the next inflation report, the personal consumption expenditure. It's like the CPI report. It's a little bit more broad in the things that it measures, and it's also a little bit more timely as in recent data. Because of that, the Fed allegedly weighs the PCE report with more weight than it does with the CPI report. They're pretty similar, but I just wanted to let you know the PCE report coming out tomorrow morning, 8:30. But there are a couple of things on the docket today. We already talked about earnings. Dell, Lululemon, and Ulta are the major ones. And then there's nothing really going on tomorrow. And then with respect to seasonality, today is actually leaning bullish. So this is a look at the hypothetical equity curve you would have if you bought at open and sold at close on the S&P 500 futures market on this day. So going back about 25 years, it started off very poorly. You would have started off in the red on the very first year, and then it kind of just chopped. But over the past 10-ish years, there's kind of been an uptrend. So this day went from a seasonally neutral day, and then about 10 years ago, it started to favor the bulls. So if you look at that whole data set over the past 25 years, as in 25 individual trades, the bulls only won it 52% of the time, so roughly 50-50, and the profit factor is now in the green. But obviously, if you start it, instead of doing the past 25 years, if you look at the past 15 years, it's much more bullish. And obviously, I'm of the opinion that maybe you should weigh the recent data with a little bit more weight than the older data. So that's why it's not really a bullish day. It's not really a neutral day, but a leaning bullish day. So thus far, the pre-market trading is agreeing with it. And honestly, this is probably one of the best reasons of why you should get this free newsletter. Once again, it's free. You never have to pay for it. Is I just give you the seasonality for each individual trading day of the upcoming week. And just so you guys know, tomorrow it is notably bearish. So Friday, August 30th, the bulls have only won it a third of the time, as in the bears wearing it 2/3 of the time. The profit factor is below 1, favoring the bears. And here's a look at the equity curve. It's just continually trending down and down and down. So from a seasonal perspective, this is by no means a guarantee. I'm just giving you the odds of the situation. Today, it's a little bit more likely to pay if you're a bull. Tomorrow, a little bit more likely to pay if you are a bear. And then I give you an update on the options strategy. Piper. And right now, Piper's on a crazy win streak. So as of the conclusion of last week, she was at 22. And then that means right now she's on a 26, 28. She's crushing it. I think Piper's currently on a 28 win streak. Absolutely insane. And here's just proof of what happened yesterday. This is why you should get into the Discord. Speaking of which, that's what's pinned to the top of chat in the description of the video. Why should you join? Well, first of all, it's free if you put in the code Goonie for the first month. You're going to get grandfathered into the cheaper prices. Prices are going up after Labor Day. So get grandfathered into the cheaper prices right now. And to test drive it for a month where you don't have to pay anything, just make sure this code is applied. Once again, pinned to the top of chat in the description of the video. And why should you join? Well, the question is, are you going to get more value being in there than not being in there? My trades alone yesterday made $1,950. Here's proof of Piper. Piper fired off at 10:04 in the morning, recommended a bearish trade, a call credit spread, 4 out of 5 confidence, which is a 2x multiplier. Basically, there's either 3, 4, or 5 in terms of confidence. So for the unit multiplier, it'd be 1, 2, or 3. That's the association. But anyway, that ended up returning $162 at its base sizing, which would have cost $278. Obviously, you could scale it up from there, but this would have been the base sizing that would have been required. So for every $278 in your account, you could have bought more and more and more, and you would have been making $162 for every $278 investment. And that was just a day trade from yesterday. So obviously, this trade alone would have paid for 3 months. You could have gotten this for free and then paid for the next 3 months from this one individual call out. And then obviously, if you were of the same mindset that I had, I ended up selling SPX. I sold it at 150, bought it at 20, and I had 15 of them. So that was a return of almost $2,000 before fees. So that trade alone would have paid for almost 4 entire years. So do I think that there's more value being in there than not being in there, even after the free month is gone? Of course I do, because it's just net ahead. We just got some basic math. So that's the pitch. I think everyone should check it out. And also, you have nothing to lose because the first month is free. So test drive it. If you like it, great. Stick around. You get the cheaper price. You'll be grandfathered into whatever your current plan is, whether monthly or annual, and not be impacted by the price increase. And you could decide that during the free month. And if it's not for you, just make sure to cancel your account. You'll never be charged anything anyway. So there's no downside. There's literally no downside for you to check this out. But anyway, that's how everything went yesterday, and hopefully we keep rocking with it today. Now, with that being said, the market is bouncing back. Where's the SPY? All right, we're still below where we were at 8:30, right here. 8:30, 560.15 was kind of the right where we were, the first trade value before those reports came out. We went up, we came down, we bounced a little bit, and now we're just slightly below it, not by much, about 35 cents. So overall, the recovery in the pre-market session has been impressive. The 5-minute screen, the 10-minute screen, the 30-minute screen on the S&P 500. Similar situation on the NASDAQ. The 5, the 10, and the 30 are all green. And similar situation on the small cap sector. The 5, the 10, and the 30 are all green. The 4-hour, these larger time frames, the Russell is holding. Beautiful bounce off the 50 EMA. The NASDAQ is actually trying to recover after a breakdown. So this might be a tradable opportunity on tech. And then ES also a potential fake out breakdown. So it got pushed below it yesterday, but now a nice recovery early this morning. So let's see how this all plays out. From a daily chart perspective, which remember, I'm a big fan of paying attention to all time frames. If we can get above and close above 561.65, which is yesterday's high, if we can get above and close above that, that would be a very bullish signal, because we went up, we started to curl over, post-market was pretty crappy, and I mean, we were even down into this region, and then all of a sudden it pulls out of it. That just shows bullish demand. Similar situation on the Qs. If we end up getting above and closing above 477, which was yesterday's high, I mean, this just represents a higher low. Like, we had lower highs, lower lows, then we bounce, we push higher highs. Then the golden question is the 50 EMA going to hold? Are we going to put in a higher low? And that would be clearly evident by push and close above 477. Now, am I saying that's going to happen today? I have no idea what's going to happen today. I don't even know what I'm having for lunch today. So don't ask me what's going to happen. I'm just saying how I would react in the event that these play out. I don't think that this is commonly discussed. I think a lot of people, especially in the retail trading community, attempt to predict. The common question is, where do you think this is going? Do you think the next day is going to be green? Do you think the next hour is going to be green? It's a game of prediction, and I think that's 100% wrong. I think that's always 100% wrong. That's a game for investing. Do you think Nvidia is going to be higher in 2 decades? Okay, and that's when you get into fundamentals and you look at growth trends and this, that, the other thing. When you're trading, actively trading, especially the shorter the time frame, I believe this becomes more imperative. You're just reacting. You're saying, okay, what is the trend? Do I have good risk reward right here? And you just put the bet on the table. It's not a game of predicting the next move, because you don't know. The shorter your time frame, there's going to be more noise. There's going to be more randomness. All you should say is, what is the current trend? What is the current risk if I were to take a trade? And what is the current reward if I were to take the trade? And then if you like the risk reward setup, you just have at it. But to try to predict of like, is this going to break out? Is this going to break down? It's silly. You're going to be right half the time. You're going to be wrong half the time. And people psychologically get tricked into thinking that it's possible, because our minds anchor onto the 50% of the time that we're right. So you're like, okay, I have all these experiences of that I'm right, so I think it's somehow possible, when in reality it's not, because like our brain apparently magically forgets about the other 50% of the time, where it's like, oh, whatever, this is a bullish pen, it's breaking out, and then it just gets smashed. Like, our brain quickly forgets it. If you were to start to look at the pure data of the situation in the shorter time frame, you're playing about a 50-50 game. You might go up or down about 10%. Your accuracy is going to be anywhere between 40 and 60. That's the most common. Obviously, depending on you and your trading strategy, it might be slightly different, but most people are going to live live in that realm of you're right between 40 to 60% of the time. And it's really tough to be more right than that. And then being more wrong than that, that's actually just sad. So if that's not the most malleable thing, what can you do? What's the other games of the equation you can change? Well, you could either increase your profit, your average return, you can decrease your average loss, like as in managing your risk, or you do that simultaneously. Obviously, you want to keep your risk as minimal as you can and increase your reward as much as you can if your accuracy is not going to be the most malleable thing. So with respect to how I would apply that mantra, that mental framework of trading to today is whenever anyone asks you what you think is going to happen, the right answer is I have no idea, because we don't know. Especially as a day trader, especially as a 0DT trader, like as a short-term swing trader, your answer should be like, oh, I had no idea. All I know is if I trade right now, this is my risk. I'm willing to accept it, yes or no. But to try to predict the next bar, the next minute, 3 minutes, 5 minutes, 15 minutes, even where we're going to be at 4 p.m., that's not how it works. And a lot of people just don't think of trading that way. Because they're applying almost investing mindsets to active trading, and it's just not what you should do. Nvidia is a phenomenal company, still could have a red day. So just to be like, well, fundamentally, I see how like AI is blowing up and blah, 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 like it just could be crushing it. That's not going to stop Nvidia from having potentially a red day, potentially a red week, potentially a red month. Nvidia went from 140 down to 90, and it's still a phenomenal company. Not much has changed for Nvidia as a company, and still with that being said, it went from 140 down to 90 all the way up to 121, and in that entire time period, fundamentally not much change about the company, and yet you saw huge swings. We saw a 35% decrease followed by a 38% increase. And what? As a company, maybe changed less than 1%, and yet you saw huge changes. So make sure you're applying the proper time frame to the analysis of what you're trying to do, because not much has changed, and yet Nvidia ripped to the downside, popped back up to the upside, trying to hold this breakout. So I think that's key to understand. I think that's very, very important to understand. And those are the types of things that we talk about in the Discord. I know I'm being annoying about it, but I just want to let everyone know it's going up right around Labor Day, on Labor Day, whatever day that would be, I guess next Monday. So I just want to let you know, if you want to trade with me, trade with other people, get access to Piper Strategy, Salad Bar, all of my trades, and the trades of other people in the community, and hang out with them in voice chat. And we're actually about to spin up a fantasy football league. If that's at all interesting to you, to trade with other like-minded people who try to approach trading in the world of math and stats and like measurable reason rather than just like gut feeling bullshit. If that sounds interesting to you, test drive it for the month. The first month is free anyway if you put in that code Goonie, and then you'll be grandfathered into the current price or in your current deal before things start to increase. And speaking of that, let's go back to the 15 second. Go back to the 15. Trying to recover a little bit. The Qs are looking the same. Even the Russell's giving a little bit of it back. Interesting. The initial reaction at 8:30 was very much a positive one for the SPY, the Qs, and the Russell. And now it's all just drifting down a little bit. It seems like the Russell's benefiting the most this morning. The SPY is currently up 0.3%. The Qs are up 0.3%. And the Russell's up double that. It's actually up more than double that. It's up 0.7%. So it might be worthwhile to really pay attention to small cap. As much as it looked like small cap was getting destroyed yesterday and really over the past couple days, Tom Lee still might end up getting the last laugh. For those of you who are curious, there is an upside gap fill opportunity on the Russell to 220. So I'm just going to set an alert there, but upside gap fill, these are high odds plays. We're currently trading at 218.66. I would be watching 220.08. That is the low from Monday, August the 16th. Hey, I'm giving you guys a free trade. If you see a low risk opportunity to enter, I think that is a great, great target, 220.08. And then obviously respect your risk. Do I know if it's definitively going to work after the moment that you place your trade? Obviously I don't. All I know is you got to protect yourself by minimizing your risk. If your risk is hit, you got to get out. But this is also a really good target just because the market has a high proclivity for filling these untested areas, which would be filled at 220.08. Once again, giving you that freebie Russell call out trade. I feel pretty confident in that. Do I guarantee it? No. As it comes back, like you guys know, I don't even know what I'm having for lunch today. No less. Where's the Russell going to go? But it's just a good like risk reward type of a setup. All right. with all that being said, I wanted to watch this. Hang on. I wanted to take a seat for it, though. Oh, I think I messed up my hip on the stair stepper. Is this what happens when you turn 30? Or I don't know if there's anyone in here who's 30 or if there's anyone in here who's over 30, but is this what life is like? Do you just start waking up with like random pains? Folks, yesterday I went to the gym, slept on a giant like orthopedic mattress. I was hydrated. I did everything I was supposed to do. And then all of a sudden, I'm still getting weird body aches. In college, I could have slept like in a V shape on a futon after being drunk all night. And I would have woken up feeling like the best yoga instructor in the world, like just ready to go, ready to run a 5K. Is that what happens, dude? Like all of a sudden you do everything right and your body still stabs you in the back? I'm starting to think that maybe the biggest enemy in my life is my own freaking body, man. Like it's just not fair. All right. Anyway, that's my complaint. We know, obviously, quick round of applause. CNBC, at least on Squawk Box, Joe especially has really been turning a leaf and calling out people's BS. And I'm a big fan of it. And it's been continuing now for the past 2 weeks. So, hey, we've made fun of him in the past. But when people start doing the right thing, I think we should give them a round of applause. And that's exactly what Squawk Box has been doing. And it's exactly what CNBC has been doing, at least with some of their shows. I can't say all because we've read some weird things on certain headlines, but at least, let's just keep it to Squawk Box. It seems like the team has been a little bit more focused on the truth than just pandering to whoever their show sponsors are. So anyway, the hot topic right now has been the tax increases. Harris's idea of increasing corporate tax and also taxing unrealized gains and also increasing the tax on capital gains. And basically, she just is trying to get more and more money, which we all know is a little bit silly because the government is extraordinarily inefficient at spending money, as in they spend too much and do not get a return on it whatsoever. So anyway, this guy, he comes on Squawk Box and he's trying to basically defend Harris's idea. And it was actually crazy and embarrassing, but the dude's now doubling, tripling down. Every time a Democrat runs for president, they're accused of pushing, quote unquote, radical policies that would hurt the economy. But as I said on Squawk Box CNBC today, just look at the scoreboard, both the job market and stock market do better under Democrats. That's actually not necessarily true. Joe responded, such a ludicrous assertion. Is there anyone that actually believes higher taxes, more spending, and layers of new regulations helps the economy? It's fuel to even question, but what time frame, what makeup of Congress, and what was the lag effects of the previous? That's all factual. To just blanketly say that everything is better under one group or the other. No, in reality, if you look at the stock market, it's had the same generic return, whether you're under a right-leaning president or a left-leaning president. That's just how it goes. You should not let your political ideology get in the way of you making money. Investing in the market, regardless of the makeup of our political stage at that moment in time, is still a net positive thing. It's just how it works.
Bharat, let's just talk about that. I mean, we can talk about people who have inherited wealth, and that's an entirely different story. But a lot of people who have worked their whole lives have put money into the stock market as a savings plan to make sure that they're saving money over time and allowing that to appreciate. That's money they already paid average wage taxes on. And that then goes into capital gains. Our stock market has done very well because you have capital gains taxes that are lower. It's an incentive for people to invest. If you take that away, what's the potential in terms of what it means for the market?
Again, look, this new rate would apply to a very small sliver of folks. On the capital gains side, you're looking at people who are making over $1 million each year, on which this higher rate would apply. And look, I hear the same argument over and over again. You heard it when President Clinton was running, when President Obama was running, when President Biden was running, that these are radical ideas that Democrats are pursuing. But if you just look at the scoreboard over that time period, out of the 51 million jobs that were created during that period, 50 million came under Democratic presidencies. And if you look at the stock market specifically, since you asked about that, the average annual return under Democratic presidencies have been higher than under Republican presidencies. So I really think this idea that Democrats are pursuing radical policies is a myth that's being perpetuated largely by very rich people who like the fact that Republicans will cut their taxes and Democrats won't.
So a couple of things to unpack there. And the one thing that I'm really hearing, especially about the unrealized gains, is, And you see it all over. This isn't just specific to our community, but that's just for the ultra wealthy. Why would you even care? Like, like, look, it's just the ultra wealthy. It's just people with $100 million. Like, why does it matter? Why does it matter? And that is just the dumbest argument, because nothing ever lives in a vacuum. So previously, I've tried to explain the logic of there's at no point in U.S. market history, tax history, that they've come up with a tax that hasn't eventually trickled down to everyone. I've even gone to the extent of showing you other places that tried to do unrealized taxes on capital gains, and it's just not gone well at all. Like, it's actually a net negative. So we've tried to explain it from a certain standpoint of, okay, when the government comes up with a way to extract more money from its population, it's going to do it. And we have the history of just the U.S. We've tried to explain how stupid it is by looking at other countries that have pulled it off. It's a net negative for them. So let me try a third one. And I read this morning and I liked it so much that I just want to share it with you, that it will directly be a negative impact. Oh, please tell me I liked it so I can find it. Where was it? Where was it? Where was it? Right here. This is another great example. The unrealized tax is only for the ultra wealthy. No big deal. Let's play this out. 25% unrealized gains on people worth 100 million. Bill Gates is worth 132 billion. Assume his unrealized tax due is about $30 billion. He would need to sell 40 billion of Microsoft shares, pay tax on that just to pay the unrealized tax. That would probably take Microsoft 10%. 7 million people own Microsoft. Think about how many people have it just in their retirement accounts, secondary exposure via mutual funds or ETFs, or just people in the market in general. Because if Microsoft goes down, we know that has what, a 6% showing in the SPY and in the Qs. It all goes down. Now repeat that for Meta, Google, Nvidia, Apple, and Tesla. Taxing unrealized gains would have a direct negative impact on everyone. On everyone. Just that much selling. What do you think it would do? So let's really think about this concept of taxing unrealized gains. It has a direct negative impact on anyone involved in the market in a direct manner or in a secondary manner. It hasn't worked in the past for other countries trying it. It's a net negative for them because the most wealthy realize how ludicrous it is. So they just go to another country. And if you're so dense to think that the government wouldn't expand it to all of us, if you really think they would just stop at the ultra wealthy with this type of a thing, dude, I have a bridge to sell you. I really, really do. So across the board, everyone recognizes how incredibly stupid this is, to the point that even politicians are saying, oh, just like we're kind of running on it, but we know it's not going to pass. So the last people who are somehow like trying to defend it are just these like virtue signaling libtards who are just like, nah, dude, they should pay that. Like, they haven't thought about it at all. Like, you don't need to be against it to somehow be shilling for the most elite and the most wealthy. You should be against it because it's going to hurt you. Who cares about the billionaires? They're billionaires. They can take care of themselves. I'm against it because it will have a direct negative impact on you, on me, on all the people who are a part of like the retail community, the average Joes. So to think that it would somehow just magically not have a negative impact on you or an impact at all, it's just dumb. It's just dumb. This isn't just like a moral thing. We just have the metrics. We have the measurable impact of where this will go. It's not good for you. It's not good for me. Why would anyone ever be in support of it? I don't get it. Who it's going to really hurt is the people who are the most wealthy. They have the most means. So that means they have the way to escape the tax burden. They'll establish residency elsewhere. They'll move their business. They'll do that. Who it's going to fall on are the people who are enough money to be in the market, to be trading, to be investing, but not wealthy enough to be able to escape the tax burden. So it's going to come to the middle class. As many things do, the load of the, U.S. government pressure, it falls on the middle class and the upper middle class. That's what's going to happen. People who have enough that they're just trying to get to the next leg, and then the government just comes down. They want to crush someone, and then they end up being the first people in the line. So who is going to really screw? Middle class, upper middle class, as it always does. That's how U.S. government, that's how it goes. So this would be literally no different than that. So once again, this all started, this is Bharat, former deputy director, National Economic Council and member of Congressional Oversight Committee. He's an asshat. Obviously, he's just, I feel bad for him. I think he's smart enough to know what he's saying is stupid, but he's just the talking head, so he has to say it. But honestly, legitimately, a shout out to Squawk Box on CNBC for just calling out people on their BS. They've been, as this election's been heating up, they've been like definitely, I don't know. It feels like they're not holding back as much anymore. So I don't know if there's new leadership at CNBC or if they have a new manager specifically at Squawk Box. I don't know what the change is. Maybe they just are getting so tired of people lying. Maybe they're just sick and tired of this, just these BS artists, these liars, that they're like, no, we're just going to call it out. And I know, I get it. I've made fun of them a ton in the past, but they rightfully deserved it. And you know what they rightfully deserve right now? A round of applause for, like, you know, speaking a little bit of power to truth, a little truth to power, whatever the fuck the saying is. What is this? Dollar General shares creator 20% of retailer cuts outlook, blaming financial constrained customers. When was that? August 29th. Oh, so Dollar General just got rocked? Wait, what happened to old DG, folks? Why is no one telling me that DG is cratering this morning? Dude, down 25%. Dude, that thing got murdered. Get your body bags ready, because that thing, we have a new cadaver, folks. It's by the name of Dollar General. Wow, that's not so bueno. That's not so bueno, mi amigo. That's not so bueno at all. All right, we have about 5 minutes to go. You guys know me. My plan, let the first 5, 10, 20 minutes of the market just trade and open. Yes, I'm going to actively trade my futures accounts via Apex. Some people were asking me about Apex. I'm still not approved. All of my payment requests from Apex are under review. I'm seeing on the internet that a lot more people are just having issues. Like the review process for when you apply for a payout is just continually being like, they're pushing it to as extreme as it can go. So they have to let me know, like according to their own FAQ, they have to let you know before the next payout period. So that's tomorrow. So before, in the past, whenever I've dealt with them, I was either approved or denied within like 2 days. And now they just drag their feet. I'm seeing a lot of people who are having issues with them of just like, why do I have to record my own trades? And then they argue that there's a lot of scammers and they're just trying to figure out who the scammers are because it's costing them a lot of money. And then I'm seeing that there's other SIM-defunded prop funds starting to make fun of them. It's just becoming a debacle. So I just want to be honest and transparent with you. All of mine are still pending. They're just under review. I think I've currently requested out $9.5 thousand. So 9.5. So somewhere just whatever. We'll call it $10,000. I'll let you know how it goes. I'm supposed to find. Maybe they'll let me know today. I don't know. Maybe they'll let me know tomorrow. I don't know. Whenever I talk to my contact at it, basically what I hear from them is, hey, we know there's problems, but we're doing a huge overhaul. We're hiring a ton of people. We're trying to get all of our tech stacks figured out. Maybe it's that. Maybe it's something. I don't know. As soon as I figure out what's going on, I'll let you know, as I always have, about my own payout requests, approvals, denials. As soon as I find that out, I'll let you know. And when the guy who's like apparently my contact at the company lets me know what's going on, but I have nothing to say because I just don't know. I like mine. I mean, I could double check right now just to make 100% sure. But when I checked it late last night, let me log in. Apparently my account is on some sort of probation because the amount of accounts I've blown out. So they've now made it so I have to have a higher amount of money in my accounts to do requests, which is fine. I'm fine with that. I'm confident enough in trade. Yeah, all of my trades are still under review. I have 1, 2, 3, 4, 5, 6, 7, 8, 9. I have 10 different payout requests, and the status is under review, and a decision has to be made by the 30th, which I can't really complain about it because it is in their FAQ. Like, of course, you want it done early, but their FAQ just says it will be decided upon before the next payout period. So, like, technically, it's still within the FAQ. So this happened to me the last time as well. They decided it on the final day and I got all my money. So this one, it feels like it's just taking longer to get the actual decision. So that's pretty much where I'm at. I'm hoping that tomorrow I can come on and tell you guys, oh, I got approved last night. Yeah, money being sent to me. Like I said, it's about it's exactly $9,500. So I'm hoping that I could come to you tomorrow and be like, yeah, all approved. It just took a little bit more than longer. Allegedly, there's massive growth and they just don't have the customer support team to like look at all the accounts and the approvals, and they're trying to scale it up. I hope it goes that way. But whatever way it goes, I just want to let you know where I'm at right now, and I'll let you know the decision either way. Thus far, I've had no real reason to leave them because they to my bank account. I've been paid out over 6 figures, and it's worked. Recently, ever since July, it's become a little bit more difficult. If it becomes absurdly difficult, I'm just going to move to another one, or if they fix it, I'll just stay. So that's where I'm at, folks. That is 100% where I'm at. Obviously, I just want to be honest with all of you. And on that particular note, dingity ding ding ding, the casino is open. Best of luck to all. Play responsibly. If not, have fun. They sound sketchy AF. I can't really say that at the moment because they have paid me out over 6 figures. This calendar year, I've been paid out by Apex over $100,000. So to me, that's not sketchy. It's more of like what's going on with the recent rules. Like it seems like they're just trying to make it more difficult, and maybe it's just because so many people, I don't know. I think they're making it difficult for people who are profitable. If you're a little bit profitable, from what I've been hearing from some of the people in my Discord, you're getting paid out and there's no problem. But I think the people who are continually getting payouts from them, they're starting to take a little bit more of a microscope, a magnifying glass to the situation to see what's what. And what I'm being told is just that they've had such an explosion in terms of people using the platform this summer that they were way behind on their own employees to handle the new load of work. And allegedly over the past couple weeks, the past couple months, that's what they're doing. They're hiring and onboarding and hiring and onboarding. So I'm going to give them a little bit. I want to give them the benefit of the doubt because once again, they have paid me out over 6 figures. But obviously if there's a better opportunity on the market, I mean, I'm not married to these people. I'm just going to do what I think is best for me, whatever I think is best, and I'm going to share your thoughts. But for right now, I wouldn't call it sketchy just because I've seen no evidence of like malfeasance or nefarious actions. I think generically trading is hard, and then people think that their own trading is hard, but when they go to a prop firm, it should be easy, and then they blow out there, and then they get mad, and they just call it a scam. I don't agree with that. Trading is always hard. I have an issue when there's stated rules, and the stated rules aren't being followed. As of now, I have no evidence that the stated rules are not being followed. Obviously, if I don't have a decision by the end of business on the 30th, that would be problematic. But right now, they're still within the realm of their own stated rules. Previously, they were doing better than their rules, and I think we all kind of got anchored to that. So I would have a problem if they don't follow their own rules. And as of now, I just don't have any evidence of their own rules. I did find it a bit weird for a while there when they thought I wasn't me. They made me send in videos of my trading. I'm like, dude, I'm an affiliate with you guys. I'm going to partner with you guys. I stream it. Here's my stream. And they like wanted me to I had to resend in my ID and proof of address. And I don't know. It seems like they had problems with me being me. And I'm like, what do you mean? I'm the world's leading Pico influencer. How do you not know who I am? But apparently they didn't. I just kind of go through the world. No, I truly assume that every person who sees me or deals with me on any given moment knows that I'm the world's best trader, at least the best trader on this side of the Mississippi. I just assume I don't know. I feel like I'm a globally, maybe even potentially a universally recognized trading brand. So when they're like, yo, you got to prove who you are. What? But I don't know. When you're literally the universe's best trader, when you're the best trader on this side of the Mississippi, I thought that got you recognition from everyone, but apparently it doesn't. Apparently, at least according to my fiance, the people in the streets of New York aren't staring at me because they identify that I'm the world's best trading. Apparently, they stare at me because I'm wearing a shirt that says MILF. So I don't know. Like 6 to 1, half dozen to another. We don't really have the evidence on it. The jury's still out. We're still waiting. I didn't know there was a gay side of the Mississippi. What? so, so overly aggressive for no reason. I didn't know there was a gay side of the Mississippi. You sound like a distraught old farmer type. It's so aggressive. That might be the funniest comment of the day. I know it's early. I know it's very early, and we're only 4 minutes into the trading day, but that might be the top comment of the day. Oh, man. That's funny. That's a good one. Anyway, SPY opening up with a little bit of strength. Same with the Qs, Nvidia as well. And the Russell's getting a little bit knocked. 5 minute, 10 minute, 30 minute bullish. 5 minute, 10 minute, 30 minute bullish. RTY, 5 minute is giving way. 10 minutes giving way. And 30 minute is still holding. But 5 minute and 10 minute are testing. So that early morning strength we saw on the Russell, it's getting hit with the old Uno reverse. So right now the Qs are up 0.9%. The SPY's up 0.4%. And then the Russell's up 0.5%. 0.5, 0.5, 0.5. I do believe that everything opened up above its close from yesterday. Yeah, so the opening value, the first trade of the day above the closing value of yesterday, which is even more impressive when you realize what happened in the overnight session. We were so low, and it was just a huge, strong recovery this entire time. Huge, strong recovery this entire time. Impressive. I mean, the Q's right here, first 5 minutes just ripping. You know what I should do is get up the options market so I don't forget about it. All right, let's see what's going on in the world of options early today. Let's go to this. A lot of puts being closed this morning. You can see it right here. This spike in the blue means a ton of puts are being closed out. So basically the people who bought them yesterday and then when they went to bed thinking they were all good are waking up this morning and they're going, what the fuck just happened? Equities are going up. Mag 7 going up. Yeah. Things are looking dandy. Dandy. All right. Decent open. As always, I'm going to wait those first 5, 10, 20 minutes just to see how things are shaking out because the amount of times that we've seen pumps and then it's faded and dumps and it recovers, or it could just keep going. Obviously, that's a possibility. I just don't like to do anything this early in terms of creating new plays. Sometimes there's times right at market open I'll get out of plays, but getting out and getting in are obviously two very, very different things. Here's the SPX. Holding above 5,600 is where you're going to have a lot of positive gamma. So I would expect things to be relatively calm above this level. But one thing that we could do to actually check that out is going to indices and then coming all the way down here. Next expiration. I mean, yeah, 5,600 right here. This is the positive gamma zone. This is the negative gamma zone. So if we hang out above 5,603, things are going to be pretty good. I mean, and then it gets even more noteworthy above 5,620. But if we can stay up here, things will be stable. When you have negative gamma, that's where you get those big move days, whether up or down, not necessarily bullish or bearish. I'm just talking about the proclivity for the market to have big ranges or kind of just a little bit more calm. And the calmness would definitely be evident above 5,620. So anywhere above on the SPX above 5, which is where we're at right now. No surprise it ran into a little bit of resistance. I mean, look at literally that's the resistance it just ran into. It's highlighted right now. Can I make this a bit bigger for all of you guys? Here. This is the 5,620 in here. So let me go to the next expiration. That's today's 0DT. Right what I have highlighted, this is the wall we just ran into. There's potentially another wall above 5,643. But overall, anything above 5,603, calmness, like market kind of imbalance. And then things will get funky probably below 5,570. So this is the region that I'd be paying attention to. But right now, the SPY is actually looking pretty freaking decent. All right, let's get rid of this. Let's go back to the hero. I don't know how people trade without knowing what's going on in options. It's just so telling. Like, what do people do? Are they just flipping coins? Look at this. Options are just going buck wild this morning. Absolutely buck wild this morning. Interesting. 85. The Russell getting hit, not holding those pre-market gains. You have Bitcoin chilling just above 60,000, Nvidia at 123. I'm seeing a lot of green on my watch list. In fact, the only thing that's red is Nvidia, but even that is slowly but surely grinding its way back up. Slowly but surely grinding its way back up. And while we're waiting for all this to play out, my apologies, I forgot to tell you guys exactly where the market's going today. Yes, you could do fundamental analysis. Yes, you could do technical analysis, but the best analysis you could do in reality is talking to the market gods. Get yourself a set of the Cats Rule the Earth tarot card set, and then learn how to have expert communication abilities with said market gods, which obviously that's what you're going to need to do from the tarot cards. And then you have to know how to interpret them. And that's what we do day in and day out. The tarot cards are never wrong. Fundamentals, they're right 50% of the time. Technicals, they're right 50% of the time. But if you want to put those two together, 50 plus 50 is 100. Now you're talking about the tarot card set. It's the only way worthwhile to trade. I promise you.
Target filled. Order submitted.
Hello?
Target filled.
Hello? Mom? Mom? I guess we're playing this recovery.
Target filled.
I guess we're playing this recovery there, Tonto.
Target filled.
Bada bing, bada boom. 1, 2, 3, 4, 5, 6, 7, 8. So 12 more to go. 12 more to go. 12 more to go. 12 more to go. Not a bad day to be me. Not a bad day to be me. All right. 3, 2, 1. All right. We got this card. Heart of the cards, heart of the cards, heart of the cards. Just pulled the Four of Wands. My knee-jerk interpretation of this card is it sounds like we're all going on a hot date tonight. It feels like those two cool-looking cats, those two cool cats and kittens are about to go on a date tonight. It feels like it's saying there's a date night tonight, which feels like it should be good, you know? That if you have the money to go on the date, most likely that means you kind of crushed it in the market. So with that being, it feels like that's positive. But hang on, we can double check. Even though I'm the world's leading tarot card trading influencer, it feels like we're going on a date night tonight. Now, I don't know if you're going on a date. I don't know if we're going on a date together. But it feels like there's going to be a date in one way or another involved. Four of Wands. Celebration, milestone, fulfillment, a joyous card that reflects a sense of completion. Perhaps you have finished a work project, a piece of art, or a home renovation. There is harmony and happiness and possibly a new romance or home. Rifts may be healed and past errors left behind as you move into a happier place. Dude, we're going on a date. We're going on a date, and you got to have some tendies to pay for a date. Across the board, this feels like it's going to be going. Across the board, feels like it's going to be wins. As you guys have seen, I'm on the wrong scene right here. I've already traded 8 of my 20 accounts, so I have 12 more to go. So we're going to see how that ends up playing out. So we took, I'm seeing some gains of 160. I'm seeing some gains of, all the way up to 300. So not bad. Thus far, decent start. The accounts are doing well. I guess I just need to keep doing well to prove that I guess I'm me and I'm the best tarot card trader on this side of the Mississippi. A little bit of a pullback here. What happened to options? Options started to dip at 9:38. We saw a little bit of a dippity doodah. Then we saw a little bit of a pippity pop, and now we're seeing another little dippity doodah. So pippity pop, dippity doodah, pippity pop, dippity doodah. That's been the order of price action thus far this morning, and that's legitimate technical analysis. I know a lot of you might be thinking you're just saying that. No, that's legit technical analysis right there. Pippity doodah, dippity doo day. Those are all legitimate trade. Like if you go to any quant shop, hedge fund, prop shop, any of that large bank, you're going to hear that type of stuff. Those are like terms of art. Those are like well-known industry terms. I just want to be particularly clear about that. All right. While we're waiting for some of this to actually develop and see really if we're just putting in a higher low on the Qs to see if we're double bottoming on the SPY here, quickly a shout out to Be Naked, today's stream sponsor, pinned to the top of chat in the description of the video. This company is a Rumble exclusive company. So for those of you, this is going to be a little bit more specific to men. So the women in the audience, I'm sorry, but maybe one of these days we will get a woman specific product. But for the men, I have them right here. There's two major things. Sleep Naked, which I've been on this now for about 2 weeks, legitimately sleeping better. And their major product is Naked Organs. So what's interesting about this, not only is it a Rumble exclusive company, as in they legitimately care about free speech, but what's cool about it is there's no fillers, there's no preservatives, and there's no antibiotics. You're getting like truly quality things in here. You're not getting any of that additional riffraff that apparently in today's day and age they try to put into everything. No fillers, no preservatives, no antibiotics. You're basically just getting a good set of vitamins. I implore you to check out their website. And if you want to try it out, once again, they have some sleep aids. They also have just good vitamins, quality vitamins. Use that code KOHRS, KOHRS, and you will be getting 15% off on top of whatever their current prices are. So for that 15% deal, use that code KOHRS, or you could just go to benaked.com/KOHRS. So either you apply KOHRS or put in the URL, do what you need to. But this is a Rumble exclusive company. So specialty shout out to people watching on Rumble. But for any of those of you who might be interested in just getting a quality like vitamin supplement, I recommend you check this out. Shout out to Be Naked, shout out to Rumble, and don't forget to use that code KOHRS, KOHRS, to get something that I really think you're going to enjoy. With that being said, back to the market. No antibiotics, yeah, because of, this is all going to be from bison, so they're basically having bison's a superfood, and a lot of people, when you're raising farm animals, you jack them up to make them bigger with whatever various things that probably you don't want in your own body. So the Naked Organs specifically, it's pure bison organs, so they're just basically putting their money where their mouth is, trying to illustrate that no, you're getting a quality product. So it's specific to the bison that are not all jacked up on antibiotics, which I don't think in our systems we really want antibiotics via the food that we are eating. Overall, right now, especially in the US, like one of the biggest issues, I suppose, in my opinion, is all the things that they put in our food. Like, just, we are not eating quality things at this point. The amount of times I've heard people who share stories of like going to Europe and eating the same thing and feeling way better, it's just because the food's way different. They're completely different rules and regulations of how they're allowed to, raise their farm animals, the pesticides they put on their crops. It's just completely different. And surprise, surprise, when people switch it up, they just feel way better, way, way better. So just a thing to point out. I think you guys are really going to enjoy it. Like I said, shout out to Be Naked, shout out to them partnering up with Rumble, and shout out to using the code KOHRS for 15% off. I think you should give it a try, and I think you're going to be pleasantly surprised. All right, we have that. Shout out to Be Naked. I just wanted to see what's happening in options. Equities are picking up. Mag 7's picking up.
Order submitted.
And we are
Target
trading
filled.
again. Well, that was a quickie. How many have we traded now? 1, 2, 3, 8 more. So it must have traded 4 there on this rebound on the Qs. Must have traded a little bit more. You know what I'm going to do is I'm going to do a little bit of a swing trade while I'm waiting. A little bit of a swing trade while I'm waiting. All right. Let me get this bad mema jam in there. Trade options. What is today? All right, we're gonna look at this, and then all right. All right, Let's see how this bad mamma jamma plays out. Let's see how this bad mamma jamma plays out. All right, let me double check. Another thing I want to see. Not really loving it quite yet. All right, I want to know if we get these breakouts.
Order submitted.
All right. 330. Let's monitor this.
Target filled.
Come on. Come on.
Target filled. Target filled.
Target filled. Target filled. Target filled. Target filled. Target filled. Target filled. Target filled. Target filled. Target filled. Target filled. Target filled. Target filled. Target filled. Target filled. Come on. Come on.
Target filled.
Target filled. All right, how many do I have left? 1, 2, 3, 4. All right, so thus far, 16 out of 20, made a couple thousand, but 4 more accounts to go. So we're flirting with perfection, but we're not quite there. Flirting with perfection, but not quite there. We just have a little bit more. I wanted to create this alert to know if we're breaking out. I wanted to create that alert to know if we're breaking out. I wanted to see what in the world is happening with options. Equities climbing to the upside. Mag 7 climbing to the upside. All right, the SPY just took some form of a hit. Luckily, I got my trade in before that happened. The 5 minute is bullish, the 10 minutes bullish, the 4 hours trying to recover. 5 minutes bullish, 10 minutes bullish, 30 minutes bullish, and the 4 hours trying to recover. Interessante. Interessante. What is this? 950. There's no announcements at 950. What in the world happened? What in the world happened right there? So clearly on an intraday basis, tech is doing the best, the Russell's doing the worst, and the SPY is somewhere in the middle. The SPY is now almost actually just getting hit. What's happening here? Why is the SPY? Very different story. So the Russell's been bleeding all day. Lower highs, lower lows from market open. The SPY pushed up. Now we've put in lower highs and lower lows. So bearish market structure. While the Qs are the opposite. Higher highs and higher lows. So maybe we should monitor this. And obviously the intraday high. We're getting very different stories thus far. And when we're getting very different stories, my biggest recommendation would just be to wait until we have a clear-cut story of stuff that actually makes sense. So patience. I'm surprised at what happened. A little bit of dip in options, but nothing crazy. The equities are whole. I think this is a fake out smack. I really do. I think this is a fake out smack on the SPY. It's not really adding up in the options market. I mean, you can see the index right here. Yeah, it dipped a little, but we're not even at the intraday low. If you look at, that's the index. This is all the individual equities. They're holding flat. And then if you look at the Mag 7, it just came back a little bit holding flat. So, of course, the very next minute, things could be dropping. But right here, this seems a little bit extreme for the underlying data set. Maybe people are a little bit worried about the Russell, but if I start to see this come back around, I might take advantage of that. Let's go to the 1 minute. Yeah. Actually, let's do this. Yeah, if this starts to come back around, I might take a shot at it because then my risk is well defined. I could just risk off the recent low, and we'll go from there. There is the gap fill on SPX. It doesn't currently exist on the SPY, but the daily, or I should say, really, from today's open to yesterday's close, there is a gap on SPX down to 5592. But I think there's going to be clear support here at 5,600. I think people are going to be reacting to that. 10 a.m. pending home sales. That could have an impact. It's not going to be the craziest thing. But I get that price is drifting down right now, but we're just not seeing the biggest reaction in options. Options are not going that bearish. You can see the index is taking a bit of a hit, but the equities that make it up, not so much. And then specifically the Mag 7, only the smallest baby drift down. Like I said, I might take a stab at this. What time is it? Like I said, here, I'm getting things queued up. Getting things queued up. All right, I'm taking a stab at it. Obviously, my risk is right here, 5604. And my I hope I got my fill. Let me just double. I did not get my fill. Son of a gun. Can I queue pending orders? Is it going to give me my fill? Is it going to give me my fill? Did I get my fill now? All right. Finally got the order in. I got my order in. Here, if you're in the Discord, I'm going to take a quick screenshot. And just to fully articulate, I have no idea where we're going. I just like that I have well-defined risk. I like that I'm trading with the trend. The 5 minute, the 10 minute, the 30 minute, and the 4 hour are all bullish. 5 minute, 10 minute, 30 minute, 4 hour are all bullish. I'm not trading the Russell. So I feel like I'm trading with the trend. I'm buying at a low. I have well-defined risk. And on top of it, more of my reasoning is I'm seeing aggression in the Mag 7. I'm seeing aggression in the equities. And right now, it seems like we just have a momentary kind of like just volatile reaction to what in the world is happening on the particular index. So I think this little bearishness is being overstated. I might be right. I might be wrong. And in the case that I'm wrong, okay, I have well-defined risk. If I'm wrong, you just throw in the towel and say, oh, okay, I read that one wrong. But I think I also have a decent reason for being, and look at that. Look at that. You know, it's kind of funny when things work out in real time and you're betting your own money on the line, your actual account. People in the Discord already know my trade. That's when I'm in there. And for you guys, I don't know, I guess just to show this off, to show you that like I'm placing actual money on the line. It hasn't even updated yet. We're going to see how this one goes. I probably shouldn't show you guys right away because I'll show you before the end of the stream, but part of me, hang on, the Qs are about to get their breakout. I gave you my reasoning in real time, and I literally walked you through everything of why I thought this was bullshit. I don't know what else. Is there any questions on that? Maybe that's like more helpful. Lucky again. Is it lucky? Or is it exactly what I said of, oh, the options market is not agreeing. Why is it going down when we see equities holding and the Mag 7? Like, I don't know. Yes, there is some guesswork to this. Of course there is some guesswork to this. Of course there is guesswork to it. But when you're right more often than you're wrong and you're controlling your risk, I guess I don't know what else more I could do because we have the data now. This isn't just like an anecdotal thing of, oh, I saw it happen once, so that's how the market works. Like, we've backtested it. We know with the law of large numbers, this is the proper way to engage in the market. This isn't an anecdotal thing of, oh, I saw it twice, so it must be like a trading edge. It's no, okay, on years and years of market data, when you have these types of setups, that's what you do. I don't know. And it's not always going to work. There's no such thing as 100% ever. That's just simply not how this game works. But when played with, let's say, proper Kelly criterion or really just proper betting sizes, yeah, you're going to be net ahead. You should never be betting it all on one thing because there's always going to be some chance, even in the best setups, that's not hitting. And that's where you learn about bet sizing, which is well understood by the sports betting community. So if you are a sports bettor and you understand like unit sizing and whatnot, you should apply that to trading as well. Even though public doesn't have vertical spread strategy set up through the option yet, can you still manually do credit debit spreads? No, you can't at the moment, but it's rolling out very, very soon. In fact, I have a meeting with them soon, so I'm going to have more of an update within a week for all of you. So at the moment you can't, but it'll like very, very soon. You're going to be able to do not only what you're asking about, but way more. Way, way more. Why is this not doing what I need it to do? All right, so the Qs are already up. 1,000. Do I just want to take it? I'm up 10%. I'm up a K. I could just take it and be like, yo, thanks. It was meant to be a swing trade. One of the things that's been on my mind lately is for all my swing trades, it's very rare that at the moment I execute a swing trade, as in I'm willing to be in it for 1, 2, 3 weeks, it's very rare that I am at the perfectly wrong moment to trade. As in, I was doing some of testing, and unfortunately I didn't have all the data, but it's very rare that within a swing trade that I'm not at one point or another at least up 10%. So part of me started to think, should I just start taking all my money at 10% and just do it time and time again? Because the trade-off there is you're never going to get these high flyers that you ride for 400 or 500% if you're always taking it at 10%. But I would end up trading more because I'd be in and out of positions a lot. So if I don't have a position, I could take advantage of more signals. And I don't know, your amount of trades goes up, but it's kind of tough to know if it's net beneficial. I think it would be easier psychologically just because you're like 10% in, out, done for the day.
Order. Target filled.
Dude, this is going. Done. You read them and weep. 20 for 20. It looks like my best gain was 300. My worst gain was 160. All 20 accounts. Playing the breakout, playing the daily breakout. Beautiful. Daily breakout plays are high odds plays. How do I know that? Because I fucking back tested it. That's what I get so frustrated about with all these trading gurus and furus is the second you ask them for any of the information related to like, what's their system? I don't even think it has to be automated, but just tell me, how often are you right? How often are you wrong? What's your average win size? What's your average loss size? And they say, I don't know. I don't know. How are people possibly trading without knowing the odds of what they're doing? It blows my mind. If you want to be able to even have a shot of getting consistent money like this, you have to know the odds of what you're doing. Imagine going up to a game in the casino and not even knowing the rules or the odds of the game. You would never do that, and yet people do that in trading. And I think it's just because it's psychologically presented in a different manner. So I think I see why it happens, but don't do that. No, like take 1 weekend out of your life. 1 weekend. You could do this for a couple hours and start to develop your own system. It doesn't have to be complicated. Right now, I am telling you, I'm giving away the basis of a really good trading system, playing the breakout and the breakdown of the previous day's high or low. Look at it, back test it. If you don't have the ability to code and do all that data, just anecdotally check it. Go look at the last 60 trading days, set up an Excel sheet and look at the amount of times that had you taken that breakout trade or taken the breakdown trade, start to play with it. How often can you get a 1, 2, 3% return? You're going to find that the odds are very impressive. And all of a sudden, once again, like you could add certain filters on, particularly on the risk side to make it a little bit better. There's other things you can do. But overall, that's the basis of a true trading system. I could come to you and you'd be like, what's your trading system? And you could say, when X, Y, Z are true, I take the breakout trade of the previous day's high. Great. You have well-defined entries. You have well-defined exits. And you could start to manipulate a little bit, be like, okay, I'm looking at this exponential moving average. Oh, okay. I find it's better if it's above or below a certain RSI. Or maybe you see the breakout on the daily and then you're like, okay, but I wait for the pullback on the 1 minute to get better entries. This is what you should be thinking about. Those are the exact types of things that should be in your mind when you're like, oh, okay, I know historically this is how it's done. And if it's net profitable, you might want to play it out on real-time data, out of sample data, to see if it's something that you can still make money. Folks, I promise you, if you dedicated 10 hours of your life, something that could be done in 1 weekend, that effort that you are dedicating could be a giant financial swing to the upside in your life. Because as soon as you put in all that upfront effort to find a profitable trading strategy, you get to use that profitable trading strategy. In my mind, it is a way better time value than simply, I guess, showing up between 9:30 and 4 every single day and saying, hey, I'm just going to trade this because it's moving. And I just you just chase it. And you don't know the odds of it. It's a foreign concept because a lot of people don't talk about systematic trading or mechanical trading. And I'm not talking even about a bot that does it for you. I'm talking about mechanical trading as you have a set rule of entries and a set rule of exits. And when all the entries are checked, you get into the position. When all the exits are checked, you get out of the position. When you can develop your own mechanical methodology that you follow, that's going to be the big turning point in your trading career. And I guess my pitch to you is, if you're listening to this and you're like, that sounds like bullshit, that's not for me, I trust my gut. If you're not a profitable trader, what do you have to lose? What, like, if you're already losing money, you might as well just try this. Like, why not just give it one weekend's worth of effort in your life just to give it a whirl? It's not like it's going to get better. Like, or excuse me, it can only get better. If you're already losing money, and if you're consistently losing money, why not? You know, like, just maybe I'm onto something. Maybe these gains aren't just a fluke. Maybe, just maybe, on the 1% chance that I'm not selling you complete bullshit, and maybe this is a better framework to look at the market. What's the downside? If you're already losing money, you might as well give this a whirl. Because if you're losing money and you keep doing the exact same thing, that's actually just fucking crazy, and you need to stop that right away. It's not necessarily bad to lose money. Of course it sucks, but it's bad to lose money and not to do anything about it. If you're consistently trying to do something and you're losing and losing and losing, it's on you to do something better, to at least try something out. The new thing that you're trying, you also might lose money, but at least you took some sort of progressive step onto the next iteration of your trading career. But if you're consistently losing money and then you're consistently doing the same stupid fucking shit every single day in the market, you honestly have no one to blame but yourself. Just try something out. And like I'm telling you right now, it could be as basic as, just whatever comes in your mind. Be like, you trade the 50 EMA crossover on the 10-minute. I have no idea if that's good or not, but at least you're coming up with a clear set of rules. If you don't have a clear set of entry rules and exit rules, how do you even know what you're doing? How is it trackable? How can you possibly know how to improve it? How do you know if it's good? How do you know if it's bad? How do you know when you should be betting more or less? And most people don't have that. Most people are just like, I don't know. Like, you're just chasing. Most people end up chasing whatever the hot thing is. And I mean, I've been there. I've lost multiple six figures doing that type of a thing. Multiple six figures doing that type of a thing. And I think some of you are hearing what I'm saying and you're like, okay, cool, that makes sense. And maybe some of you need to touch the hot oven to realize that it's a hot oven and you're going to get burned. Even though I'm here screaming, it's a hot oven, don't touch it. Yeah, we all go through it. I've lost a lot of money. And you're going to come to a crossroad. You're either going to commit to keep doing the same thing that's losing you money and you're eventually going to blow out and think that the markets are rigged and they're against you and you're never going to trade again. Or you're going to realize that we all have horrible like mental issues and knowledge issues and various pitfalls that we fall into trading, and you start to chip away at them until all of a sudden you can turn this around and actually start making money. And I implore you, the best thing you can do is start detailing everything. Why'd you get in? Why'd you get out? What were your rules? And you're going to start to notice patterns of positive things and negative things. And then you obviously double down on the positive things and start cutting out the negative things. That's what you do. There's a million different strategies that will make you $1 million. That's clear. The hard part is finding one of those million strategies. And you just have to put in the effort to do it. And that's what it is. When it can be daunting and shitty at first because you're going to do a lot of work where you find no particular edge that is valuable. You're going to find 99 different strategies that are all worthless, but it's worth it because that one that you find could literally be the one strategy that is that's the thing in between you and what you want to do with your life, or the shitty job you currently have that you want to leave anyway. I'm not pitching this anyone as an easy concept, but I am pitching it as a more profitable concept than trading on your gut. And I'm also pitching it as a better utility of your time. We all have a finite amount of time. You should dedicate it to something that could have a measurable positive impact on your life. And once again, it's by no means easy, but the question is it worth it? I would, till I'm blue in the face, argue that yes, it is. But I suppose on a certain point, that's just a personal decision. It's just a personal decision. I think someone asked something about Discord. What was it? Do you have any futures trading setups in your Discord?
We talk a lot about Apex and whatnot and different plans. And then we've done some intro strategy stuff for like actual automated trading. If you're interested in that, yeah, there's lectures, there's pre-filmed lectures. Well, they happened in real time, but they were filmed. So you could watch those. And yeah, I mean, I'm in there. So I started with automated trading. Like automated trading, it's kind of funny. Like my background's in computer science. So to me, I think there's certain things that resonate with people of just so obviously, like I'm sure there's something in your life that like when you heard about it or when you think about it, there's nothing more clear cut, right? Like just something in your life, whether it's the school you should go to, what you should major in, what you should do with your life, the person you should be with. There's certain things in our life that I feel like we all have a certain thing where you just like, you get into a certain event or you're on a certain journey and something just speaks to you as the most evident thing ever. In my life, the most evident thing that just screamed in my face that like you should be doing it, and maybe a better way to articulate it is, I don't know how many of you have seen that the documentary or whatever it is with Arnold pumping iron, and in it he talks about he was growing up in Austria, he's in the military, it blew his mind that not everyone had the same goal of getting absolutely ripped so you could be a movie star in the US. Like in his mind, that was the thing you should do with your life because it just spoke to him, and it blew his mind that other people are not doing it. Like how could you possibly not have that goal? So maybe that's a better example of what I'm trying to explain. In my world, there is nothing more obvious of what I should be doing, and it blows my mind that other people aren't doing it, is to create your own trading systems, your own fully automated trading systems, because it doesn't matter if you're sick. It doesn't matter if you're on vacation. It doesn't matter if you're sleeping in. It doesn't matter. You've put in all the upfront effort, and now you're effectively earning passive income. And if you make a good system, you can earn a lot of passive income. And to boot, like the little kicker here, the sprinkles on top, is a fully automated system. You're taking yourself out of the equation. So it doesn't matter if you're sick or tired or hungover or fighting with this person, having a good day, a bad day. It doesn't matter. Your emotions are removed from it because you found the system, the mechanical system that makes you money. You know, in the long term, it's net profitable and it does its thing day in and day out. Is it a lot of upfront effort? Yes, of course it is. I guess similar to Arnold's story, yeah, it's a lot of upfront effort to live for years and years and years, be Mr. Olympia, start to learn how to act, and then do all the movies. But you put in that upfront effort because of the payout at the end. It's just delayed gratification. So similar to that, in my mind, it blows my mind that people just don't want to make 30 different trading strategies, run them all the time, and let them do itself. And then just say, okay, cool. Would you ever sell the Piper system? No. I mean, I give away the signals, but I'm not going to give away the like core code and reasoning because I made it. And I guess it's mine. It took me hundreds of hours to like refine and create. I mean, it was funny. It's funny you bring that up. Just the other day, I need to like do, what was it? I was rerunning some of the data on some ATA sample stuff, and I could see the version number that I'm on, because on my computer when I do it, it was Piper version 1, Piper version 2, Piper version 3, Piper version 4. The current iteration I'm on Piper is 47. So I'm on the 47th version of Piper. And then please remember, Piper itself, half of Piper was already another system that I created. That, I don't know, it probably ended up having close to like 30 or 40 when I'm done. So this one, like that just gives you an idea of how this type of shit works. But to me, once again, in my mind, it blows my mind that not everyone's goal is to make whatever, X amount of profitable strategies. You put money behind it and you move on with your merry way. Because what does that do? Money is a tool that lets you do whatever the fuck you want to do. If your goal is just to have money, I guess I don't really agree with that. It's just, to me, it's a tool that you leverage to get more time with your family. It's time. It's a way to optimize time because you get to do what you want. You get a quality of life that you want. Money's a tool. I mean, I know some people just like, to them, it's a game of how big can their bank account get. But to me, it's just a tool that you can leverage in other aspects of your life to really achieve the life you want. Like my goal is not to make money just to have money. It's to make money so I can do the other things I want. I wasn't the best person in corporate America. I had a particularly prickly attitude and personality that made me not fit for corporate America. And that became pretty evident, like literally 2 months into my first job. It just wasn't me. And if time itself is our most finite commodity that you're trying to utilize to the highest amount, well, the best way in my mind that you could utilize time to the highest amount is you need another tool, aka money, to be able to leverage it to get there to do what you actually want to do. So because of my, I guess, philosophical outlook on life, it blows my mind that not everyone's goal is to create their own trading system or to create 10 of their own trading systems. But I'm sure people would say that. Like if you talk to Elon Musk, it probably blows his mind that not everyone, I don't know, wants to improve humanity and become like a space traveling like civilization. If you talk to Arnold Schwarzenegger, how could or Phil Heath, how could everyone not want LeBron? How could everyone not want to be an NBA superstar? I think in our minds, we all have our own thing that's just like crazy of like, how are people not achieving this and not going after it? And I suppose that's just like my own look on it. What language is Piper written in? Well, it's just a bunch of data analysis. So 95% of it was done in Python. 95%. Python is going to be the easiest one to do that type of data analysis. And what's cool is, okay, my background's in computer science, so I had to write a bunch of the code and do the analysis myself. And I was able to pull that off because I was also getting a master's in statistics, but I dropped out of that program because my content career took off. So I have some knowledge of that, but it's easier than ever. It's easier than ever because right now, do you know how many different AI tools there are that can do all the coding and analysis for you? I could understand 4 years ago people having the excuse of, Matt, that sounds great, but there's too much of a barrier for me to learn how to do all of this. I got it then because not everyone had the background that I have, but you literally have no excuse right now. I could literally name 10 different services that do the coding for you and the analysis for you. The only thing you have to do is basically get off of your lazy ass and start using those programs and start just being curious enough and be like, oh, okay, is this a good strategy? Is this a good strategy? You just have to be not lazy and curious enough to search different things and basically just not give up on it. I promise you this, if you're listening to this right now, I promise you this, if you are listening to this, in fact, if someone does this and I am wrong, I will pay you $10,000. So listen up. If you can prove me wrong on this statement, I will pay you $10,000. $10,000 I will pay if you can prove me wrong. From this day, it is August 29th, 2024. If you dedicate 20 hours a week for the next year, so we're talking about August 29th, 2025. If you dedicate 10 to 20 to 30 hours, let's say it averages out at 20, to creating your own trading systems for an entire year, and you're dedicated enough to do that, I bet you within 1 year's time, you will have a very profitable system. So then at that point, you have nothing to lose because if you can prove that wrong, if you can prove me wrong on that, I will send you $10,000. If you can say, hey man, I did 20 hours of research every single week. And I'm talking to people you might know nothing about coding, but with the current tool set available to you with all this AI stuff going crazy, if you dedicate 20 hours a week, just 20, not even full work week, 20 hours, you could bang that out on the weekend, Saturday, Sunday, 10, or you could split it up throughout the week. I don't give a fuck. If you did that for an entire year, your chances of success and finding a profitable trading system is going to be extraordinarily high. I mean, I can't say 100%, but I'm 99% confident that you're going to be like, hey man, I appreciate the 10K and all, but I actually ended up finding 5 different trading systems that are going to make you money. If you truly can dedicate that time, and if you're serious about it, people don't understand how much you can really change your life in 1 year. As much as, it's kind of weird. Time itself is kind of a fascinating concept because when you talk to older people, they talk about the concept of like, they feel like they like just blinked and all this time passed in their life. And that's true. I believe it. But also a year is simultaneously really long and really short. It feels really short because every New Year's we sit there and we're like, wow, a whole year passed. But if you think about it day in and day out, like if you're just grinding on that thing that you give a shit about, you can make a lot of progress. And my argument to you of why you would want to do that is there's most of the time what we're doing in any given year, you're forgetting about anyway. Think about all the times you just sat there on the couch and you watched TV or you did this or that. And like, it was so mundane and like kind of nothing to you that it's literally not in your memory. Like, yes, you dedicated time that particular day to do that particular thing, but now it's literally erased from your memory because like it was just so mundane. My argument to you is, why don't you go do those mundane things that you're going to forget about anyway, but cumulatively they add up to improving your life. So once again, if you in the most is it going to be boring? Fuck yeah. Is it going to be? Yeah, obviously. Is it going to be frustrating? Of course it's going to be frustrating. Are you going to feel like it's worthless? Most likely, but all of a sudden you're going to start seeing progressive steps. I would argue, actually coming back to Arnold, which I think is a good example. Think about anyone who goes to the gym. Most of the gym sessions you have, you're going to forget, but yet you still have that benefit of going to the gym. If you're pissing away your time and just continually doing things you know you shouldn't do and you're watching Netflix, there's no net benefit to watching Netflix. Like, and I'm not against it. I'm not going to be one of these hardcore David Goggin motherfuckers who's like, carry the bus, fucking never do anything. Okay, like, yeah, I get that sometimes you need to like unwind, unplug, and do whatever you need to in your life. But in a general sense, make sure that you're not abusing that so much. Think about all the times you go to the gym that you have no memory of, and yet it benefited you. You're a little bit stronger. You have better cardiovascular. My argument to you is, why not do some of that with your financial life? Do some things right now that most likely in the future you're going to forget about, as in it's erased from your memory, but yet you can still reap the benefits of it. I think we all have 20 hours of free time. I really, really do. I really, really do. So just do it. Fuck it, man. You're going to forget it anyway. You're dedicating time that's not going to feel like anything, and yet you can somehow have legitimate improvements. I really, really believe that. I think about that all the time. Go to the garage. What are you doing in the garage, Pickle Me Timbers? I think about all the times I go to the garage. Wait, what the fuck is in your garage? Football, Chiefs gonna three-peat? I think so. What say you, Matt? Are they losing Ayuk? Are they lose? Do we know? Because if they lose him, I think that could be. I think that could be a big thing. Are they losing him? I guess my answer: they're going to be good. They're going to be a top 4 team for sure. I don't want them to win, but they are a really good team. A really good team. Why are the Qs falling? Why is everything falling? Why, oh, why, oh, why? So the SPY took out the high from yesterday, and the Qs took out the high from yesterday. Both of those happened exactly at 10 a.m., and we've been dipping ever since. The 5 minutes bullish, the 10 minutes bullish, the 30 minutes bullish, the 5, the 10, the 30 is bullish. The Russell is actually now recovering. The 5 and the 10 and the 30 are back in the green after a fake out breakout. So 3 of the major indices. It's kind of interesting. The recent strength in the Russell is actually being associated with recent weakness on an intraday basis on NQ and ES. Interesting. What are options telling us? So right at that moment, that was the peak in options, right at 10 a.m. This is the Mag 7. This is Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, just down. Lower highs, low. This is very systematic. Speaking of systems, you can see like just in a perfect grind, people are getting out of calls and people are slowly getting into puts. So it's just continuous. You can see this on equities as well. Perfect thing. So it's being led by these particular names. Either all of these or a combo or maybe just a singular one. I see Nvidia is now getting hit. But something in the big tech sector from 10 a.m. till about now, 20 minutes purely of selling. And then if you look at the index itself, yeah, across the board from 10 a.m. till now, some form of either a sell program or just someone with size is, I think it's a program though, because it's so continuous. Generally, if it's an actual person, they just do it at once or a couple blocks. This has been so perfectly methodical that it feels like it's a sell program that is selling calls and buying puts. Will it last forever? I have no fucking clue, dude. All I can tell you is maybe we're double bottoming here on the Q. If we start to bounce out of it on a recovery above 475, that'd probably be pretty good. If the SPY can get above 561. That's probably pretty freaking good. So we might be seeing a double bottom here on the Qs. The Russell's showing some strength. Hopefully it's a double bottom on Nvidia. Tesla popped, coming down a little bit. Coin, fresh low. Microsoft sideways after a nice pop. Apple sideways all day. Meta pop, giving it back. Rum down by 1 cent on the day. Not much movement there. DJT pop, giving it back. Netflix pop, giving it back. Amazon flat, sideways. Oil grinding to the upside. Gold now recovering a little bit after getting hit this morning. Texas Roadhouse, of course, going up because that's what Texas Roadhouse does. Boeing, hang on. Piper just fired. Piper picked a pickled Piper picked a peck of pickled peppers. What is today's date? The 29th. The 29th. The 29th. All right. Piper's in there. Not a bad deal. Do I want to do my trade? My trade. Where's my trade? Options, vertical, 10. Am I going to get my fill? Just got my fill. All right. Here, I'm going to throw this in the Discord. Gonna throw this in the Discord. All right. All right. Thick Trades. That's me. That's your boy, Thick Trades. Did we ever find out what that guy's doing in his garage? I don't know what he's doing in his garage, and I'm getting to the point where I'm like really afraid to know. Apex traders keeping their real money makers locked away from the community. Apex traders keeping their real money makers locked away from the community. What do you mean by that? And also, what is that guy doing in the garage? Garage Pickle Me Timbers. He's just laughing. Now he's manically laughing at us. So I don't know what that means. I don't know. I don't know what it means now that the garage guy is manically laughing. I don't think it could be a good thing, but I guess it just is what it is for him. It is what it is. How am I? I think I've done everything I need to do today. But you never really know. You never really know. Is there any other breaking news? I think you guys sent in things to react to. Yeah, you did. All right. These are all the things you wanted me to react to. What do we have here? That's too many words.
This is Juan, who I found selling water right outside the Stewart Hotel.
All right.
Where are you from? En Ecuador, soy de Ecuador. What do you do for work here in New York? Actualmente no, porque no tengo la documentación. When did you get to New York? En marzo. March. Who are you voting for, Trump or Kamala? Kamala. Why Kamala? ¿Por qué Kamala?
Wait, if he has no documentation, how can he vote?
En ella y está más con los inmigrantes que Trump.
Do you have a plan to vote on November 5th?
Estoy en duda.
Oh, I have doubts that I'll be able to.
Vote at the hotel?
O sea, por ahí me dijeron una referencia que yo pude, como inmigrante podía votar.
Did they tell you that you need any sort of identification to vote?
Yo, claro, como todo país, yo tengo mi identificación aquí, pero
Bogotá.
la de la ciudad.
¿Te dejan votar con esa identificación?
Tendría que, no tengo idea, pero tendré que consultarlo.
He doesn't know. He has to consult with someone to figure out if he's allowed to do it with his license. He has
Si tengo la ID de aquí.
Yeah, he has a state ID, but he doesn't know if he can vote. Okay, how did you get your ID? ¿Cómo conseguiste la ID?
Me sacaron una cita por medio de una organización, asistí y me demoraron 15 días y me la entregaron.
Oh, I'm still very curious on if these people are allowed to vote or not, or if you have to be, like, what are the rules now at this point? Like, who can vote? I'm confused. Who can vote and who can't vote? Joe Rogan is pissed off.
Did this recently, and this has gotten so popular that my stepdad contacted me to tell me he's happy that I'm suing MSNBC. I'm like, I'm not suing MSNBC. But this is what MSNBC did. They took
I think it's actually nicely breaking out. I could restart that. Yeah. SPY, new intraday high, Q swinging back around. Russell's pumping. I don't know why I'm bowing up, but let me put back to Nvidia. Yeah, Nvidia's starting to pop a little bit as well. So new high there. Let me just mark that out. And then let's also move this up. So higher highs, higher lows. Higher highs, higher lows. Well, same lows. So double bottom on the Qs. Potential if the Qs fall right here, shoulder, head, shoulder, not so good if it snaps 474. But it could also just be a double bottom, and if it takes out 477.77, the current intraday high, clearly the bulls are in control. So SPY is looking strong. Qs are looking kind of sideways, like kind of indecisive. I would like to see it above 477, and clearly the Russell, after a bout of bearishness, is now looking bullish. But anyway, let's come back to this. Why is Joe Rogan peed off?
Did this recently, and this has gotten so popular that my stepdad contacted me to tell me he's happy that I'm suing MSNBC. I'm like, I'm not suing MSNBC. But this is what MSNBC
probably
did.
Should.
They took a clip of me talking about Tulsi Gabbard, and they edited it up and made it look like I was saying great things about Kamala Harris.
Wait, what?
Yeah.
I mean, you and I have been mashed up on other stuff and AI, and I don't want to, like you said, we don't want to draw attention that they got taken off the internet, thank goodness, but it was bull. It was like it was AI and mashup.
Yeah, there's a lot of
they
AI
did that
ads
about,
with us.
They did that about politics?
Yes, they did it about politics, but they didn't do it like AI. They just deceptively edited the things that I was saying, took it completely out of context, where I was talking about, first of all, I was talking about Tulsi Gabbard, and then I was talking about that the media behind Kamala Harris, all this surge and all these people just deciding that she's good, she could win. And they put the two of those together and made it seem like I was praising Kamala Harris and saying a bunch of things that aren't even true about it.
It's so dirty. He should sue him. I don't understand how people say that Biden and Harris don't have accomplished anything in the past 4 years.
I don't understand how people say that Biden and Harris have not accomplished anything within the past 4 years. Yes, they have. They've allowed 15 million illegals into this country. Like, that's a lot of work, guys. There's been a historic inflation crisis. Record high gas prices in all 50 states. Like, that's huge. Record consumer debt. They've released terrorists into this country. There's been the Ukraine-Russian war and Israel-Hamas war. And violent crime skyrocketing. They've accomplished a lot. I literally don't understand.
I literally don't understand as well. They have accomplished a lot.
I'm sorry. I am so tired of the tens of thousands of just hard fours online being like, I'm voting for her because he's going to strip all of our rights away as a woman. I can do that as a mom and a da-da. What rights, babe? What rights? He was already president, and how many rights did you lose? 0. He's trying to protect women's rights. What do you think it is when we have men in women's sports? We have men in our personal spaces. What do you think it is when dangerous men come over the border? That's what protecting women and children is. Oh, he already said he's not going to do a nationwide abortion ban. He's not going to do it. If anything, it's going to be state by state the way it has been. And guess what? If a state, 90% of people in a state want something, I think that state should have it, even if I don't agree with it. If you don't like it, move to another state. It's very simple. Stop with the propaganda. This is why people make fun of women. Use your brain. Use your brain, babe.
I just want to clarify that I'm a hard 4. That's my only add-on to that video. When it felt like, when she said hard 4, it felt like a personal attack, honestly. TikTok employees getting in trouble for betting that their company will get banned. Are they allowed to do this? So a few months ago, when everyone was talking about TikTok getting banned, I put a large chunk of my sign-on bonus on a prediction market trade call sheet under yes position. That was to cover my ass in case it actually happened, and it would be good. It's just hedging. I mentioned this to a few people on my team, got back, but then my manager told me today that I need to sell off the position, that this is a violation of the company policy. I think it's a smart hedge, honestly. I think that's a smart hedge. We really pay to live on Earth. The realization that life on Earth is a scam.
we really pay to live on Earth. None of us asked to be here. None of us asked to participate. And yet we gotta pay to live, eat, sleep, breathe, shit on this place.
Well, that's not actually true. You're paying because you're benefiting off of someone else's work and efforts. You can go live off the grid and not pay anything. Have at it. And it'll just be you and what you could put together. That's what you're paying for. That's kind of a dumb take. This sums it up. Any questions to what's happening here? White dudes for Kamala.
Hey, sweetie. Why don't you bring that juicy ass over here and hop in Daddy's new whip?
Excuse me?
I don't know why it's just so funny. Who knew Japan took rock, paper, scissors so serious?
Ready?
So wild. Leave it to Japan to take it to the next level. She's so stoked. Like, it's like a gold medal performance in her mind. That's pretty crazy. And Rock won. What a bold option for Rock. All right. Nvidia's popping, Qs are popping, Spy. How are my positions? Up 1K on that. Up 500 on that. Up 65 on that. The $65 is the real, is the quality trade. All right. Now what do we do? What do you guys want to do today? It feels like it's kind of just a slow grind type of a Thursday here. Just slowly grind to the upside. 5 minute, 10 minute, 30 minute, 4 hour, bullish. 5 minute, 10 minute, 30 minute, 4 hour, bullish. 5 minute, 10 minute, 30 minute, 4 hour, bullish. We are, I guess, 12 for 12. All of those are bullish. All of those are bullish. All of those are bullish. We didn't look at the Dow, but that's because the Dow is boring. You know, I kind of talk shit on the Dow a lot because I think it's boring. And someone actually DM'd me about it because, like, I guess they felt personally offended that I said the Dow is boring, which I thought, what? They like, how could you say that about the Dow? How could you say that about the Bow? I think I found other things that I thought would be fun to talk about. What's this guy up to? Chicago officials passed a resolution for a ceasefire in the Middle East, but they can't get a ceasefire in Chicago.
Chicago officials passed a resolution calling for a ceasefire in the Middle East. That's great, but maybe they can have a ceasefire in Chicago first?
It would be nice if there were a ceasefire in Chicago.
The same people that said the economy was great under Biden are now preaching that Kamala will fix the economy.
Bidenomics for the win. FTW. I love the concept of, maybe I should just really start pitching taxing unrealized. Maybe I'm on the wrong side of this. Just do all of the taxing of unrealized gains. All right, is there anything else we're missing? I'm not really seeing breaking news at the moment. Let's see. Nvidia pays price of lofty expectations, stoking fear for rivals. U.S. economy expands at revised 3% rate on resilient consumer. Most hated credit trade turns into a big winner for hedge funds. Trump and Harris talking loud and saying nothing. Welcome to the world of politics. Kamala Harris faces critical tests with long-awaited first interview. I have a question for you guys about that. Is it really boss lady stuff that she's doing her first interview with an old white man? Is that really like the current level of feminism that we're at, that potentially the most powerful person in the world, a potential woman, not that she's potentially a woman, that she might potentially win, just to clarify. I'm not saying she's potential woman. I'm saying she's the potential victor. Isn't it weird that she's by herself or not? Like, wouldn't that be like leadership? Like, I'm here, I'm doing it, this is me. Why is she with a crusty old white man? He's no man. Oh, so maybe it is two women up there. Otani signs long-term baseball with Fanatics. I know Harrison, the football receivers, in a fight with Fanatics right now. All right, what else do we have? Dollar General shares cratered 25%. Gap shares halted after apparent early earnings release. Rutro raggy. Rutro. Someone's going to get fired over that deal. All right. I'm not seeing anything there. Explore. What is trending? What is trending? What is trending? What is trending? Wait, what is RFRM? What is this? Is it a pump? Reform Dow? Some Dow? Feels like probably not going to end well. Game day, Colorado. What's happening in Colorado? Why is Colorado trending? Breaking: an armed Venezuelan gang of illegal immigrants have reportedly taken full control of an apartment complex and parts of the town of Aurora, Colorado. What? What's happening in Colorado? A Venezuelan gang took over. Armed Venezuelan gangs of illegals are taking over Aurora, Colorado. Apartment complexes are now trashing the neighborhoods. Harris happily imported this third world trash. Couldn't we just send the National Guard in there and take it? Dude, this video. So what's big? It just shows you how messed up. Aurora, Colorado. An armed gang. What is happening in Colorado?
Got hit.
Holy shit. All right, if you're in Colorado, be safe. I don't know, dude. Holy crap. Dollar General, Labor Day. Brazil, PS5, Boar's Head, Danny White, Free Beacon, Kroger. You know they're trying to hijack school buses too. Stay safe and strap, folks. Gee, yeah, please be safe out there. What do I think of JoJo Siwa's new Cybertruck? I think she's losing her mind a little bit. Kind of has like Amanda Bynes vibes. All right, we're definitely going to get DMCA'd. My apologies. Didn't mean to do that. In a shocking announcement, Donald Trump said he would fire America's leading generals and replace them with MAGA generals. This is what fascism looks like. Retweet to make sure all Americans can see this. MAGA. MAGA. What else do we have? What else? That lady looks a little crazy. Kamala and Tampon Timmy visit a high school today.
Please count on all of you. You are leaders. By the very fact that you all are here in this room, doing what you do at this incredible school, doing it as one big team, understanding all of the different parts that fit together.
Big hand movement.
To create a team. Countries counting on you.
Lot of hand movements. Lot of hand movements there. Hassan gets called out for pretending to be poor by destiny. Aren't they both multimillionaires?
I talk to labor leaders, community organizers on a daily basis. They're in my community. I hear what their problems are. I know what my struggle used to look like not that long ago in terms of like my own personal finances, having to budget everything.
Oh my God, kill me. Was this when you, with two rich parents, when you decided to come to the United States after being rich in Turkey, and then you came to the U.S. to be rich in the U.S., and then you worked? Remember how hard it was? To be fair, Hassan's job, his first job was, he was only making $60,000 a year to make videos for social media while having his college and everything taken care of by his rich mom and dad.
Options are bullish.
So that was kind of a struggle, I guess.
These are financial problems not so far removed from my immediate.
I don't know how anyone watches Hassan. Like, does he actually have fans and supporters? I guess I can't talk shit because he's a lot more popular than I am. But at least I own the fact that I'm like richer and more powerful and better looking and have a lot more influence and are way cooler than all of you. Like, he tries to hide it. Why doesn't he just own it, you know? Why doesn't he just say, yeah, I am the world's biggest Pico influencer? Blows my mind. Oh my God. People are still talking about AMC. Are they, and fucking 240, are they brain dead? Coffee. What's going on with coffee? Should we be trading coffee? I think it's KC is the right one. Dude, who knew coffee was ripping, brother? Is it, why are there two coffees? One's on ice, one's on, yeah, that, okay, so it must be the other one that people are actually trading. Look at this, coffee, all-time high. How's orange juice doing? Frozen. Where's my frozen orange juice? Right here. Oh, orange juice back to squeezing, folks. Don't you worry. The squeeze was taking a bit of a breather, but we're back to squeeze city on orange juice. How's sugar? Sugar popping a little bit. Lumber getting cheap. Lumber's going down. Live cattle. How's cattle looking these days? Cattle stable. What else do we have? What are some other fun? Palladium maybe bouncing a little bit. Platinum not moving much. Silver peeking its head up. Gold going up, not far from an all-time high. What else do we have? Where is Bitcoin at? Bitcoin saving itself, maybe a higher low here, maybe going with the new higher highs, higher lows. This would be a higher low relative to what we saw in mid-August. Oh, we're just waiting for this breakout. All right, we'll mark that. This Qs haven't hit a new high, but they're looking good. Nvidia's bouncing. The Russell's going flat. SPY's looking good. Thoughts on nicotine being bullish during a stressful season? Kind of those like Sin the Vice plays. I don't think there's going to be a spike. I think they're still going to be popular. But remember, you wouldn't know those numbers until after, like the quarter after the election is like when those numbers would be reported. So there'd be a bit of a lag. But I mean, those Vice plays, I don't think they're going anywhere. Alcohol, tobacco, gambling. It's just how life goes, man. People like it. SPY's almost at an intraday high. I mean, and it makes sense. Look at Mag 7 ripping. These options are picking up all day. The equity, today's a bullish day, folks. It is what it is. Don't forget that at 1 p.m. we have the 70-year bond auction. And then also at whatever o'clock tomorrow, we have the PC report, another inflation report. What are they talking about on CNBC? I guess nothing. I guess they don't want to let us know they don't want to let us know their secrets. What's moving? What are the big movers? DJT's up 2.5, Apple's up 2.5, Microsoft's up 2.5, Same with Tesla, same with coin. Bitcoin's up 3%. Generally a green day. Bonds are down a little bit. Other than that, it seems like everything's recovered to the tune of about 2%. Hey, Matt, which brokerage do you use for credit spreads? You can't do it right now, but you'll be able to do it soon. It's on Public. So Public doesn't offer it yet, but it's coming very, very soon. So that's my recommendation. Public is my favorite place to trade options. Yeah. I mean, it's the only one I know of that gives you rebates. So you can't do it at the moment. If you're like hot and heavy and want to do it today, Tasty Trade would probably be the best place to do it. But like I said, Public is my number one options trade and recommendation because it's the only place you get rebates. And just so you know, if you're trading credit spreads, you definitely need to know the difference between American and European style contracts. It is very, very important that you know that difference. Because if you're trading American style contracts, you're at risk of what's referred to as pin risk. So just be careful with that. And it's because they're physically settled, while American style, or excuse me, European are cash settled. So there's no such thing as pin risk. So that's a little bit of a nuanced thing. But if you're engaging in the world of trading spreads, particularly credit spreads, you're going to most likely want to trade European style contracts over American. So an example for that would be SPY. SPY is an American style, but then SPX, still the S&P 500, this is European style. So if you're engaging in credit spread trading, whether calls or puts, most likely you're going to want to be doing SPX over SPY. Just so you guys know, because it's called pin risk, PIN, and it only happens with physically settled things, and it happens when they think you're in danger of one of them being in the money and the other one being out of the money. So if you're engaging in it, look up pin risk, and the most likely the solution is that you just trade European style contracts such as SPX or NDX or VIX or RTY or XSP. All of those are European style contracts. It has nothing to do with the actual countries, just so you know. I don't know why they're called that way. But American style contracts, when trading spreads, you're going to be potentially at risk of what's referred to as pin risk, PIN. If you want to give it a quick little Google. So the SPY and the Qs just hit a new intraday high. Why should you guys be in the Discord? Because I made this trade today. I am currently up $6,000. I'm up 4.5, 1.5. Where's my history? Here's proof that I did it today. So right here, I did this trade. Does it give me a timestamp? 9:48. I did this trade at 9:54, August 29th. Proof that I'm putting my money where my mouth is. Up 6K. Get into the Discord. What are you doing? Pin to the top of chat. If you want this stuff in real time, ask anyone in the Discord. They could attest to it. I put it in there, took a quick screenshot. They already have the Piper trade. Is it worth it? Literally right here. This is paying for 13 years of the Discord. 13 years of the Discord from this one trade. Think of it like a business decision. Do you get more value being in there than not being in there? Obviously, right here, I would strongly argue. I just showed you it was executed today. This is my real account. It's not fake. I'll reload it. This is my real money. You can see it. I showed you the time of the trades. People in the Discord will attest that I did post it in there. What do you want me to? I don't know what else I could possibly do. I don't. Be in there. You're going to be better being in there than not being in there. And the first month is free anyway. If it sounds too good to be true, first of all, yes, you should think that way when it comes to everything in life, and also specifically trading, because most things are too good to be true. And that's exactly why the first month is completely free for you to test it out, because I don't want anyone to feel like they got. This is the final week for you to sign up before prices go up. So if you want to lock in the current price, you should use the freebie month now, because you'll be grandfathered in if you choose to stay. What about the negative trades, though? How's your win rate overall? Once again, everyone in the Discord will attest. I do my daily DGen report every single day, Monday to Friday. You see my winning trades and my losing trades. If anything, I think most people in the Discord would argue that they actually learn more from my losing trades. The way I do it is I post my trades when they're first made. So I don't know the conclusion. It's not done in hindsight. To be fair, this trade is live. Like, I could lose money. All of my trades are posted when they're executed in terms of the entry. So there's no like Monday morning quarterbacking, because I post the entries and then you're going to know the exits. It's never the game of, oh, I did this, I got in and I got out and I'm here just to brag about it. I mean, you can on locals. Yes, you're going to see big winners. For example, yesterday made 1.9 thousand. The day before that made 1,000. The day before that, nothing, no trade, plus zero right here, nothing. The day before that, lost 35,000. Like, I don't hide anything from anyone. Like, it's all there. And here's the proof. Here's my timestamps. You could add it up, minus 35. So that's a big loser. That sucks. Made 9,000. Didn't trade, zero. Lost 13,000. Made 45,000. Like, I show it all. And I have no way around it because I post my entries, and thus it would be weird if I had entries and then something goes south and I'm like, wait, where the fuck's your exit? So does it always work? No. If you think someone's always making money, plus 3,000, like, I mean, that's the reason. It's all there. You could actually, those degen reports, the daily trade reports, anyone could get them. You don't even have to be a member of the Discord to get those. They go out to literally everyone who's just a member of locals. So no, I show them all. I show them all. People, it's only fair, it's only right, it's only moral that if you see my gigantic winners, to also share, just be honest and share everything. If not even for me, if you don't want to join my Discord, if you don't want to be a Kamaguni, hey, I get it. Maybe you like someone else better. But as just like one little red flag, if someone's only ever winning all of the time, run as fast as you can, because that's not real trading. There's no such person out there who is always winning. It's going to be about 50-50. It's more about how you manage the winners and manage the losers. That's very much going to be the key thing. You have hidden your passwords multiple times from chat. It's just duckboy69. You all know that. Whether I'm hiding it or not, you know what my passwords are. Do you think it's a good idea to trade Nvidia today? I'm having trouble finding an entry. Which are you trying to be bullish or bearish? Is it a day trade? Is it a swing trade? Is it an investment? Matt, you kind of do win a lot though. Yeah. But you could change the odds of that by playing, like, I don't know. I target specific delta levels to keep a high win rate on options selling, on premium selling, but then I do different tactics when I'm long calls, long puts, and I do different tactics with Apex. So it's all, you can skew the numbers up or down in accuracy, but remember, that's only a part of the equation of, are you profitable? Just signed up after all of the smack I was talking yesterday. Hey, I appreciate that, Brian. And what I'm telling you is, your first month's free. Apply that code Goonie. Brian, I'm telling you, I appreciate you being there. I appreciate you giving me a shot. And if it's not for you, it's not going to cost you anything. Give it a test drive. Use everything. Check out all the signals, watch all the lectures, and then within a month, you're going to have an opinion of if you should be there or not. So that's the entire point of the first free month, is I don't want anyone to feel like you got. So you're talking smack, that's fine. We all talk smack. But you utilize everything you can possibly use in there for the first month and see if you like it. And if you do, great, stay. And if it's not for you, that's cool too. Do you think a retail trader can do quant trading? Oh, of course. Don't confuse quant trading with high frequency trading. It's very, very absurdly difficult for a retail trader to pull off high frequency trading, but that is, high frequency trading is like a type of algorithmic quant trading. There's many other ones. Like, you could be a quant trader as an investor, like, and be like, hey, I trade a couple times a year. So don't associate quant trading specifically with speed, because sometimes it could be as long as investing, and it could be as short as like literal just microseconds. So the retail probably won't have the money or the infrastructure to pull off high frequency trading, because it's much more of like a hardware problem, and the data feeds and the lines. It costs a lot of money to get going with it, like a lot of money. And it takes an absurd amount of skill and knowledge and connections. So retail traders most likely will never be in the world of high frequency trading. Maybe there's some examples of it, maybe. But in terms of can you do automated trading as a retail trader, the answer is a definitive yes. A definitive yes. Matt, does it matter how much money you have to get started if you join Discord? You have to have some money. It's not that high. If your trading account, to be completely realistic, if your trading account is below 2.5 thousand, it'll probably be difficult. Just because sometimes the trade itself requires like $300 worth of capital, and that would be roughly just over 10%. So just in terms of like betting odds and whatnot, yeah, it's not like the bigger your account is, it's going to be bigger. But to be honest, it'll be very, very difficult to take full advantage of Piper if your account's $500, because there's some days that the signal costs $500. So just to be honest, you could pull it off, but you're going to have to be picking and choosing your trades. You wouldn't be taking every signal. And in terms of good, like Kelly criterion betting, it's going to be the more money you have, the easier it will be to be successful, unfortunately. But just to be honest about it. All right, we're taking a little bit of a breather. Let's check in on options. Options are going flat on equities. Options are going flat on the Mag 7. And then we're seeing the index take a little bit of a hit. We've been seeing this over the past 3 months that something's a mismatch. When the individual like equities are holding fine, and then the index, it's just an index bet that dropped it. Generally, like a rubber band, it bounces back. That's what we just saw in the past 6 minutes. I think this bounces back. I would change my opinion on it if all of a sudden we see the Mag 7 start to dip. If this dipped, I might be like, oh, we're actually dipping. But I think if anything, this is just a rubber band effect, just to be very, very clear. Any insight on when public will have spreads? I'm told very soon. I'll have a very specific date for you soon. But when I say soon, most likely within the next 2 months. And in terms of a specific date, because remember when you're doing that stuff, it's not necessarily just the company. You have to get regulatory approval that you're doing it all right. And like a lot of the times it's like the government that is slowing them down. So I should have a specific date for you very, very I should have a date even soon, but in a general sense, you're going to have not only spreads on public, but way, way more. They're going to be doing one giant update that you guys are all going to be very stoked about. The biggest issue with Piper is a small account is that PDD stops you from taking every play, so you physically lose the edge. Well, you're not losing it. It just takes more to realize it. And I know what you're saying, but one way you could do that is, let's say you have $5,000, you could split up 2.5 grand across 2 different accounts, because then you could trade every single day. So remember, with pattern day trading, it's only per brokerage. So let's say you have X amount of money that's below 25K, you could do that and split it up, or you can switch it to a cash account and then just bet accordingly, where you're not dwindling all of your cash. So there are some workarounds for it. But obviously, right now in U.S. equity markets, it's just easier to be above pattern day trading. And I still think it's like one of the dumbest rules ever that we like still have to battle with that. I joined, and to be honest, just the exposure to the live trading chat is worth the money. At the base level, I think it would cost me $50 to interact with people that know far more than I do. I appreciate that. I know, speaking for the community, I'm sure they appreciate it. There's great people in there, and there's different insights, and sometimes we're all in alignment. Other days, people are on completely opposite sides. I think the more ideas and the more discussion and the more cross-pollination, it can only be a positive thing. It can only be a positive thing, in my humble opinion. There's a lot of great people in there. I hope I teach them stuff. I know they teach me stuff. Like, it's a community of people who are on the same page. Like, it's just like we're trying to we all have the clear same set goal of, can we find more edges to exploit to make money? And ideally, the more people you have with that, you should theoretically be closer to achieving that goal. But anywho, enough of hard selling. The Discord, you get the point. Sign up before the prices go up. Your first month's free anyway, so you have nothing to lose. Use that code Goonie when you are signing up. Pinned to the top of chat in the description of the video. Also, shout out to Be Naked. Use that code CORS to get 15% off. That's what I have for you. Market's looking bullish. I have bullish positions. Hopefully things remain this strong and get even better into market close. I'm very, very excited because if things get going, they could get going nicely. We're going to be streaming tomorrow. We're going to be streaming early tomorrow because of the inflation report coming out at 8:30 a.m., an hour before the market opens. And between now and then, we also have the results of the 7-year bond auction at 1 p.m. Eastern today. And then 30 minutes before the market closes today, one of the Fed members will be speaking, Bostic from Atlanta. So you might want to pay attention to that. So bond auction, Fed speech, inflation report, that is all happening between now and market open tomorrow. We will be streaming early tomorrow, just so everyone knows. That's what I have for you. I appreciate all the good vibes. Make sure to get yourself a Lucky Buffalo shirt so all the market guys are on your side of the trade. That's what I have for you. Much love. Peace.